Hi and welcome everyone to today's presentation at Investor Days. My name is Daniel Thorsson, analyst at ABG, covering IT and tech companies. And the first presentation we have now is with Invisio and the CEO Lars Højgård Hansen. So I let you start your presentation, Lars, and we will follow up with some questions afterwards.
Thank you very much, Daniel, and welcome everyone to a short update on Invisio. We are the global leader in communication and hearing protection for demanding environments. Our customers are found within military, police, law enforcement, and firefighting. And what they have in common is that they work in very difficult circumstances and often very high noise environments. And our mission is to protect them also they do not get hurt unnecessarily and they can live a normal life at home. Next slide, please. So we have, in a short period of time, during the past 10 years, become the global leader. We are approaching 1 billion in revenues on a rolling 12 months basis with a good operating margin. We did have some impact and delays because of the global COVID pandemic during the past 2 years, but now we are back on track and have a very strong start to 2023 that I will get back to in just a minute. But we are an innovation company, deploy the latest technologies. We are based in Copenhagen in the global cluster for hearing technologies. We have sales offices in the US, UK, France, Italy, and Thailand. And we operate two global brands. Invisio is for users that operate in the field, and a brand called Racal Acoustics is related to hearing protection and communication in vehicles. This is a company and a brand that we acquired a couple of years ago. We hold a portfolio with long-term agreements and programs. Most of our customers are government customers, and therefore business is often done on a long-term scale with long-term contracts and programs. And our sales model is that we primarily sell direct, but also in certain cases through select partners. All of our manufacturing is outsourced, so we have an asset-light business model, if you like. And we have been listed on Nasdaq Stockholm since 2015, and we are now on the mid-cap list. Next slide, please. So as I said, we started 2023 very strong. Actually, it was the best quarter in the company's history after two difficult COVID years. We saw very strong order intake, sales, and profit, and I'll go through some of these parameters on the following slides. The order intake is a very important parameter for us because that's, of course, indicating the revenues and the sales in the coming quarters. And we have seen a strong development in our order intake and order book over the last year. For the third quarter in a row, our order intake now exceeded 1 billion SEK. And as you can see on the curve, there are sometimes fluctuations, quite large fluctuations between quarters. But when we put in the average 12, you see a good positive development in our order intake since 2019. What is happening now in the Q1 is, of course, also an effect of the increased geopolitical instability, especially in Europe with the situation in Ukraine. We are also seeing that Invisio is a different company than before the pandemic. I will get back to that, and therefore we have a broader portfolio and more revenue sources, and therefore a better stability in the order book and the order intake. So order intake in itself was 350 million for the first quarter. Next slide, please. Yes, and the order book then leads to a very strong order book that has been increasing significantly, as you can see also here. Back in 2019, the order book at the end of a quarter was around 100 million. Now we are at 600 million. And so does that mean that we have difficulties in delivering? No, it does not. This is just reflecting that we have a very active market and a lot of activities going on. And since we work with outsourced manufacturing, I would say that deliveries is the least of our concerns. We have ample capacity, and deliveries are more guided by customer wishes, because customers sometimes have plans for how they would like to roll out our products, including training and so forth. So therefore, we deliver according to customer wishes. But the strong order book is, of course, also good for us, because now we have visibility some quarters down the road, and we are able to plan our manufacturing in a good way. We have a history of having a certain amount of inventory, approximately 140 million Swedish kronor in inventory, and we do that because it is a competitive advantage. Our products are standard products. They only come in two colors, and we don't have any scrapping normally, so we can have a good inventory, and that gives us an advantage, because we can see that especially at this time there is a demand for somewhat more speedy delivery of units, and therefore inventory is a key. Next, please. So revenue, we saw more than 100% revenue growth in Q1 compared to the same quarter last year, actually 119 in comparable currencies. And as I said, this is getting us close to a 1 billion target for a 12 months period. So sales is definitely at a higher level than before. It should be said, of course, that the two COVID years were quite flat with a small growth, but not to our satisfaction. So we are happy to see now that things are getting back to normal. I should say also we have two financial targets. One is to grow our revenues with about 20% in average per year, and the other one is to have a sound profit with an EBIT margin not below 15%. And apart from the COVID years, we have been able to meet those targets. Next, please. Gross margin is another important parameter for us, because that allows us, a high gross margin allows us to, of course, invest further into new products and into the organization. And traditionally, we have been sort of in between 55 and 60% gross margin. We have an internal ambition to get up between 60 and 65. And as you can see, in the first quarter of 23, we actually reached 62.5, so we are within our targets. Now, we are impacted by the product mix. We have different types of customers and solutions where the product mix or the product marketing can differ a little bit. So we are a little bit depending on the total mix of solutions that we have during the quarter. But we have recently launched a range of new products where we believe we are able to take out a better gross margin, and we also believe that as we grow, we have more efficiency in our supply chain, which will help us improve our cost prices and thereby our gross margin. It has been a little challenging during the COVID period. As you all know, there has been component shortages on certain things that has given us extra costs. And now we've seen inflation and continued price increases, but we have up until now been able to compensate with our own price increases and with a good relationship with our suppliers. So a good start to the year. Next, please. Operating expenses is in line with the trend we have seen, and the operating expenses is primarily number of employees, and of course it follows the activity level, and it follows the revenue levels. So any further recruiting is driven by business opportunities, and we are still in a situation where many of our markets have very strong growth potential, and therefore we will continue to increase our organization in line with the increase in revenues, of course. Next, please. On the margin side, as you can see here, we had, as I said, a couple of tough years during COVID, where we actually went onto the wrong side of the zero line here. But we accepted that because we were quite sure that the underlying trends in our markets were intact. And after the COVID pandemic was over, we were quite certain that the markets would return to normal. So therefore, we kept investing in products and in the organization. And as we can see here now from the from the third quarter of 2022 into Q4 22 and Q1, we have now seeing the profitability go back to really strong levels. So we went from minus 2.8% EBIT margin in Q1 22 to 26.9% in Q1 23. And that illustrates the strengths of our business model with outsourced manufacturing. So as soon as revenues go up, then we have an immediate effect on the earnings. Yeah, next, please. So as I've been trying to describe here, we are now at the start of 2023 seeing a much stronger INVISIO than before the pandemic. We have continued to invest heavily in the organization and in new products. We have made a range of new products in all areas. We have broadened our offer. We have new customer groups and a broader customer base in general. So from having a rather focused approach to markets and products, we now have several areas that we are addressing that I'll get back to. And we have also, during the pandemic, acquired a company, Racal Acoustics, that I mentioned, that are the market leaders for hearing protection and communication in vehicles. And that has been a great complement to the existing INVISIO products. Next, please. For those of you not familiar with exactly what we do, here's a little short overview on the upper left-hand corner. This has been the base and the starting point of INVISIO, where we do hearing protection and communication systems for people in the field, either military or law enforcement, police, and so on. And these are consisting of headsets, different type of headsets with hearing protection, and control units that can interface to the user's radio communication devices like walkie-talkies or intercom systems, or what they are utilizing. So this has been the core of INVISIO for a very long time. And then on the upper right-hand corner is the high noise vehicle solutions that we acquired through Racal Acoustics, that now gives us the hearing protection solutions, also with heavy-duty headsets for use in mobility, ground mobility vehicles, helicopters, boats, or in armored vehicles, etc. So this is Racal has been the leading brand for more than 50 years in this area. So it's a strong addition to our portfolio. And just before the pandemic, we introduced a very innovative and disruptive portable intercom system. It has the size of an A5 paper, approximately on iPad, if you like. And this is a portable intercom system that allows users to communicate in a group when they are on board a vehicle or helicopter or a boat, so forth. And this product is very relevant both for military and police and law enforcement users, where they are then able to have an intercom set up very quickly between a group of, say, 4 to 10 people. The system is fully integrated with our dismounted solutions and our vehicle solutions. So it's a plug-and-play system that we expect will be a very strong contributor to the INVISIO business going forward. And what ties all of our products together is cables that are intelligent. And by that, we mean that they have built-in information and intelligence that makes all of our systems plug and play. When you get them out of the box, you connect the cables, you put it on, and it works. There's no calibration, there's no manuals, there's no other difficult setup procedures needed. It is plug and play with the different cable that we operate. So that is a very important part of the system. Next, please. And we operate in a number of markets, as I said, market for users in the field, market for vehicles, the high attractive intercom market. And then when we talk about users, it's the military, it's the law enforcement and police. And in total, we believe at this point in time that the addressable market is around 14 billion Swedish kronor. It is characterized by high entry barriers. So those that are leading the market, like us, do have an advantage. It is characterized by only a few competitors, a handful of competitors at most. And it is also characterized by the fact that demand is driven by structural growth. So in almost all countries, there are modernization programs running for both military and law enforcement, police, where they are updating their equipment to more modern and radio communications and hearing protection and so forth. And then there's also another mega trend, which is a focus on hearing protection and damages and cost related to that, because hearing damages is quite frequent when you work in high noise environments if you're not protected. And that has a huge cost to societies in countries where, in terms of compensation and maybe even taking people out of service after long trainings and education because they have a hearing damage. So it is in everyone's interest to reduce the hearing damage impact on people and for the cost for society. So and then next, please. I think what we have all seen in over a year now, a new situation in Europe with Ukraine. And of course, this has a huge impact on the outlook for our industry. Even though we are not classified as a military company, we are commercial. Our products are commercial off the shelf. They are not defense or military per definition, but we do sell a lot to military customers. And here we have seen the largest increase in military spending in Europe in 30 years. We see that there is a huge need for modern communication equipment and hearing protection of the type that we have. And we see larger budgets everywhere in Europe especially, and we think this will allow for a faster rollout of our type of products. So there's no doubt in the longer term that there will be an increased demand for all of our types of products for the next 10 to 15 years in Europe. We also know that our industry moves a little bit slow, so it does take time. But there's no doubt that this overarching factor in terms of large increases in spending is a positive for INVISIO's business for the next 10 to 15 years. Next, please. So this is my final slide, and with that, I would say that we have carried out quite extensive investments in recent years, a lot of new products, a broad organization, and now we have a strong order book and a really strong and active market. And with that in mind, we predict continued strong sales, order intake, and good profitability for the remainder of 2023. So with that, I conclude my short update on INVISIO, and over to you, Daniel.
Yes, thank you very much, Lars. Obviously, I think the first question I have is that 2022 was a very, very strong year for you, but have we really seen the effects from increased military budgets across Europe so far, or do you expect it to come more in the future?
Yes, it's definitely in the future. It is far too early. And as I said, things take time. I think we hear in all markets that governments and military institutions are discussing how much to increase the budgets and what to buy in what order and so forth. So there's no doubt that this takes a little time, but it will be a significant game changer for our industry. I think in related to Ukraine, as we've seen, what has been provided in the last year has been a lot of ammunition and defense systems and vehicles and so forth. But further down the road, there will be a need for many other things as well. And the vehicle industry, which of course is also important to us because of our vehicle products and the intercom, is where there is a lot of business ongoing right now for new vehicles.
Yeah, I see. And although your TAM is very large and you have penetrated less than 10% of it, what's kind of the replacement cycle or the lifetime of your products? How long time do they last?
Yes, our best estimate is sort of 3 to 5 years. Again, of course, depending a little bit on how much you and under which circumstances you use the products, because we, of course, know that they are being used in very rough and tough environments. So it is a little bit depending on, again, how much it is being used, and maybe rougher environments with military than with law enforcement and police. So, but in general, sort of 3 to 5 years replacement is what we calculate with.
Yeah, okay, that makes sense. Secondly, related to your penetration and the addressable market of 14 billion SEK, as you mentioned, the rest of the market that you have not penetrated or captured, is that kind of untapped potential, or is it competitors holding parts of that?
No, it is definitely. I think we have been quite conservative here. We in defining the addressable markets, we have looked mainly on the larger countries in Europe and in NATO, including US, of course. And so on. So we've been trying to be a little bit cautious here, but there is, of course, with the new situation in Europe and Ukraine, reason to believe that the addressable market could be a lot larger. But we have not put any time into that right now. I think we have the market is big enough for us to grow substantially and in line with our targets of 20% per year on average. But we will be looking at this going forward at some point in time.
Yeah, that makes sense. Looking at your pricing power, the gross margin was very good in Q1. It improved. What's your kind of pricing power, given that you're selling to public customers while you're sourcing components and products on the private market with current inflation? Can you pass it on to customers, or?
To some extent, yes. In most of the contracts and deals that we do, there is clauses around inflation and other price increases. So yes, but I think what we focus more on is also as we grow as a company to really utilize the buying power that we have and also the economies of scale and just being also better when we design new generations of products. We're constantly getting better at designing them for efficient manufacturing, so that we try to reduce the amount of time that is used in manufacturing, and also trying to use components that are good enough for what we need it for. So I think it is realistic for us to aim at 60 to 65%, but still keeping in mind that there might be fluctuations between quarters.
Yeah, okay, that's good. And looking ahead on your guidance for 2023, it's obviously a positive guidance on sales, also on order intake. But how should we view the order book? It's at really high levels right now. Is sales growth going to come from reducing the order book in the coming quarters, or can you maintain this high level and have an order intake matching the sales growth? Or
I think if you look at it now, Q1 was plus 300 million, and we had an order book of 600. So that means emptying the order backlog in 2 quarters, and I think that's fine. And again, we are always trying to match customer requirements for delivery. So and many of the customers we deliver to, they do need a little time to organize for training and logistics and everything else. So it is fine. We have sufficient capacity, but we will also not push anyone to take deliveries before they actually need it. So that's also one of the reasons why revenues could fluctuate a little bit, because they don't necessarily reflect our ability. It might be that it reflects what the customer wants.
Yeah, I see. My last question is related to M&A. You acquired Racal Acoustics in 2020, and you have a solid balance sheet. Are there anything else to do in the market? Can you acquire competitors, broaden the portfolio further, or?
I would say that it is a niche market. There are not that many competitors, and those that there are sometimes quite small and local or regional, and from a technological point of view, maybe not so attractive. So I would say that the number of M&A opportunities are there, but it's rather limited. So I think you will probably see us wanting to invest in our own organic growth and our own development. And as you say, we have a strong balance sheet, very, very strong financial position. So we have the means and the possibilities to continue to invest in areas where we see strong opportunities for future growth.
Yes, excellent, Lars. I think that'll conclude the presentation. Time is running out, and thank you very much for presenting Invisio.
Thank you. Thank you.
Hello and welcome back to ABG Sundal Collier's Investor Day. My name is Hanna Forsgren and I work as an equity research analyst here at ABG. With me today I have Nexam Chemical and Ronny Törnqvist, CEO, together with Johan Arvidsson, previous CEO. The stage is yours. Thank you.
Thank you.
Thank you.
All right, my name is Ronny Törnqvist. 2 days ago, this Monday, I started as CEO of Nexam Chemical. And I'm pleased to be here today to present what we are doing. I'm doing it together with Johan Arvidsson, who had the position until Sunday. And we will do this together. So if you want, please start, and then I will take the second half.
Okay, thank you very much. I guess this will be my last presentation for Nexam in a forum like this. So I will give the background to Nexam and what we are doing and so on, and then I will hand over to Ronny that will tell you more about the view forward and things like that, and then it will be followed by a question session in the end. See if I can change. Yeah, Nexam Chemical is a company selling additives for plastics, and additives for plastic is a way to actually improve performance of plastic. It could be to improve properties. It can also be to improve the possibilities to recycle plastics. And many of us have been, there is the debate in the society about whether we should have plastic or not, taking out plastic from as much as ever possible. But if you look into it a little bit, we are quite tied into a society with a lot of plastic, and plastic can contribute to a lot of what we define as sustainability. Windmills, for instance, wouldn't exist without plastic. Solar panels wouldn't exist without plastic. Whatever we do in sports, we will wear plastics in one or the other ways. The healthcare sector is also it's difficult to see a healthcare sector without plastic today, actually. So it's not about if we should have plastic, it's about how we can handle plastic in the society and make it in the best possible and most sustainable way. And here Nexam have additives and materials that are enabler for those trends. You should do this with a clear vision about sustainability. Plastics is a debated material, so make sure you have a plan for it. And we have been taking advantage of a program that Nasdaq is running that they called Green Equity Designation. It's a well-defined, audited program where a third party will investigate your performance, and we got the label last year, and this is something we take very seriously. So we don't want to have sustainability as a pure storytelling. We are a chemical company in the polymer sector. We need to do a little bit better. If we look back to the development of Nexam, what we are selling, this has been the company is founded out of a spin-off from Perstorp. It's more than 10 years ago. It was very much a research company until like 2015-16, where it started to be much more of a commercial activity in the company. We have been growing until 2018 through acquisitions, but since then it has been purely organic growth. And we between the years 2018 to 2021, we doubled the turnover. 2022 was a challenging year for us, mainly due to the fact that we are quite exposed to amount of wind energy that is windmills that are produced, and it has been quite a flat growth in wind energy builds during the last 1 or 2 years. It's still in the shift now of improving. So that we suffered really from that. So we follow a few mega trends, Nexam, and we have been taking advantage of those mega trends in our marketing and sales activities. It has been in the beginning of Nexam a lot around lightweighting and using plastic in really high level compositions, composite materials for high temperature applications. Lately, we have been very much driven by renewable energy. We see now waste and recycling. Recycling of plastic is really the area where we see a big future and potential. And then also plastic for the future, about making green plastic, plastic from renewable resources, and that can be a driver for us in the future. But we are really in the middle of, so I will give a little bit background on where the area where we are mostly affected for sales and where we see the highest development, which is waste and recycling. If we look a little bit to why do we believe so much in the wind energy, or we sell additives to make PET foam. And PET foam is the core material in windmill blades. And this is something we got into in 2018 as a starting point. We started to sell quite a lot to one of the big foam producers. We took another one on in 2019, and there are a few more we should tackle, and we are doing that. But if we look to the growth in that industry, it's also, first observation is, of course, that it has been quite flat during 2021 and 2022, and that is something we also have seen in our sales numbers. It has not been a dramatic increase in that. On a material level, it's expected that this will grow with something around 6%, and this is the amount of installed capacity of wind energy. Beyond that, and this is something we expect to take advantage of. Beyond that, PET foam is still a winning material in the market. It's a material that is more and more used as a core material in windmill blades. And we also have a potential to develop our additives further and to penetrate the market even better than we have. So we still see a tremendous growth opportunity in this sector that we plan to take advantage of. If we move over to the other one we focus a lot around and often use in our communication, it's about recycling. And the target for plastic recycling is quite extreme. If we look to how much plastic that actually is made in the world, and it has been increasing, and there is it's easy to get the impression that this actually has leveled out or is dropping. It's not. It's still really increasing year on year. The expectation is that by 2030, about 600 million tons of plastic is consumed in the world. The EU target for plastic recycling, now it's a little bit different in packaging and other part of plastic, but the EU target is somewhere in the area of 50% of plastic that is produced should be recycled. Today it's like 15% recycled. There is a huge opportunity here, and all the easy things have already been done. So going forward with plastic recycling means it has to be more advanced, more value creating. It's not about handling trash. It's about creating new materials for new products and new value. And our additives are definitely enablers for that, and it's really happening now. We have been saying this in presentations a long time. We have a lot of projects. It's still a very immature market, but it's really going on at the moment. And this will be the last slide I will present. And this tells a bit the story about plastic recycling. And perfect if you can use the recycling, make a new product, the same product again. Bottle to bottle is an expression in the business, that you make new bottles out of PET from old bottles. That's a great way of working. But every time you process a plastic, you will degrade the material. You need something to compensate. Our additives can compensate for degradation. The other thing is, and if you accept that it will be a degradation, you can go for, let's call it lower grade applications, like trash bags, flower pots, and things like that. That's could be called downcycling. That means that you usually find one application and then it's over. Then you will burn the plastic afterwards. But if we are going to go to 50% recycling, we need to do better. And upcycling, going for more value-creating applications, higher level applications, that will take some technology, and that's typically the technology that Nexam possess and develops. And by that, I will actually hand back to Ronnie, that will take over for the rest of this presentation, and then we're open to questions afterwards.
Thank you, Johan. So this mega trend is quite clear, but it's a more complex situation than an ordinary development project, because you have more players in the array that needs to tie between the people that take care of the recycled material and turn it back into material, and we are a part of that process, of course, but it needs, let's say, more linkage between the end user of the components and the component manufacturers and the raw material suppliers and the, so to say, recyclers. And we are working in that field now, and more intensively so over the last year. The more we dig into this business, the more we see this complexity, and we are putting a lot of effort into get a better grip on the whole chain. But I must say that Nexam is in a very unique and strong position to do that, because we have unique materials to solve some of the core problems, to go from there to there, product-wise, and we have a great network, thanks to the color master batch business, where we have contacts in all the Nordic countries. All Nordic plastic producers already work with us. We're in the supply book, so we have great opportunities to push this forward. That's one of my targets for the coming years, obviously. But to support all this, we need to work a lot with R&D and innovation. We find the market trends, as Johan talked about, in wind energy, what is happening there, the product requirements, as well as in recycling and other areas of activity, also the high temperature composites and so on. Our core value is really that we know what we're doing, and we're developing new materials, and we work on both application development and, let's say, chemical development in order to link that. And we want to tie that even closer together, let's say, market needs, application development, and chemical development. So we have a lot of patents, and we have a patent strategy that we're currently upgrading together with our, let's say, overall strategy that is under rework right now. And but we have a very strong patent portfolio with 56 patents. It's actually one that is just about approved. It was a press release about that, which is a very key patent for recycling technology, and we continue to work with this, and also together with universities. And we have, I think it is, four recently submitted new patents, recycling related. But the R&D is really a tool to grow. We obviously need to grow to be on the market and so on, but every time it is a technical challenge, and we need a strong team in the background. and we are also updating the direction of the R&D work in order to focus on the right things, all the limited resources that we have. And we try to have a very strong sustainability connection in all those actions. But in general, you have these areas of R&D, PET foam or PET improvements that lead to foam, recycling, where in the two biggest streams, we have products that are very efficient in the polyethylene, polypropylene areas, packaging material typically, and a little bit that, and in the PET, and those contribute to more than half of the plastics that are used. So we're very focused in those areas. And then we also have, let's say, the base technologies here and here that are used also in the recycling areas. But we are currently reevaluating exactly what we do and adapting the direction, but we continue to be a very R&D-oriented company. So, coming a bit to here and now, what do we see? Outlook for this year. The wind energy market that Johan talked about, it was a slow start in 23 and a fairly poor 22. But we see growth in that sector and improving, let's say, overall demand. We're also seeing that our position with the, if we have two maybe core customers of the 4 or 5 producers in Europe, we are very active with all 5 of them right now, developing new additives together with our customers, and we are getting more and more potentials and opportunities also with the other customers there. The master batch area is a little bit slow right now because of, for example, building industry and so on. So that is a little bit difficult, whereas other areas in master batch are totally fine and as normal, medical, food, and so on. In plastics recycling, it was launched in 21 and it has materialized in some projects where we were a little bit fast, mainly with smaller companies, but the big actions that we're doing with bigger customers, they take a little bit longer time. So we're working on that a lot right now. But we have a few really interesting cases that are launched already, and we have 70+ initiatives together with various customers. Development will keep the momentum. We focus on recycling and additives for PET foam. And we're working more and more customer-oriented and together with specific, let's say, market areas. And we will increasingly do so. Sustainability. One good thing is that last year we had a tremendous drop of our own CO2 emissions because we have solar panels on all the plants now in Eastern Europe also. So we have either green energy or our own energy. So we're working on that, but the biggest impact on sustainability that we can have is with our customers, increasing recycling, reducing CO2 in the applications. And I tried to be very quick on this because we're almost at 20 minutes. We want to be a part of our customer. We want to continue to be customer focused, but even more so, and follow the market trends and be very, very customer oriented. We want to contribute to and be a part of the circular economy. And we are just in the beginning of a long journey. Sure, we had a little bit of a flat development last year, but we have very, very growth-oriented strategy. And we're reworking that strategy, but the growth vector of it has not disappeared, of course. It's stronger than ever. So very ambitious. So that was the 20 minutes. Thank you for your attention.
Thank you both, Ronny and Johan. So it's time for some questions.
Okay.
And you will be available outside after the presentation
Yes.
if some in the audience have some questions.
Yep.
So my first question will be, with the recent change of guard, Ronny, how do you see Nexam developing the coming year?
Like this, we have a very strong position. We have very interesting material, core technologies that can be used in important areas that are in growth. And with even stronger customer and market orientation, we can take more advantage of that. So I see a really strong growth potential of the areas that we are in. And now, when there is a change of leadership in the company, we will of course utilize that dynamic that is coming with that, of course, to review the strategy and target ourselves even better with all the experiences that we've learned over the last few years.
All right. So if we were about to picture Nexam in 2030, how do you think it will look?
I think it will be much more international, not in terms of market presence, but actually in operational presence. I think we will be a big player in recycling technologies and providing solutions for that. And I think we will have an even broader technology portfolio.
All right. So if we take a long-term perspective, do you expect any geographies to be more or less interesting?
No, I think if we look at what is happening in the core areas that we work, Europe has a lot of driving force and strength in that, both in development and in recycling technologies. But we see that there is equally huge interest in Asia and in the Americas to go in that direction. And some of the first really bigger customer projects in, for example, recycling of PET have been in Asia. They are a little bit faster, let's say. So I don't think we need to narrow down geographically.
All right, all right. If we go into a little bit more in reactive recycling, what do you think? What could be potential sales driver for this segment?
Like this, I've been working a lot in the plastic and composite industry over the years, and in component manufacturing industry a lot. And their challenge is that there are an Nexam and other companies that come with additives, and there are recycling companies coming with products, but they cannot just slot that right into a product because the specification doesn't fit what they're using today. So I think that a driver will be that an enabler will be that we are able to provide them with ready solutions to slot in. That's an enabler, and the driver is obviously the end consumer, the society, that we want to have. Everybody is really working towards a greener planet, and that will increase demands on recycling.
There is different types of plastic. Are there any particular sort that you think is most interesting for you?
Yeah, well, there are many different plastic materials, but the big volume plastics are obviously the majority of the streams that will come in. You will faster come into a little bit better defined materials of the recycled material and so on in those. So that's where we are heading. So polyethylene, polypropylene, PET, absolutely. We also have chemical solutions that work for polyamides, for example, but the volumes are too small to work on it right now.
All right. So my final question would be, why should a customer choose Nexam's additive?
Because we can fix their material to the application.
Thank you
and because we want to jointly develop if we cannot.
All right. Thank you very much for your answers and the presentation, and thank you, the audience.
Thank you.
Thank you.
Okay, welcome back. My name is Derek Laliberte. I'm an equity research analyst at ABG, covering mainly investment companies and media stocks. It's with great pleasure today that I have the company Nax here with me. And to present Nax today is one of the two investment advisors from Nax as partners, Amarid Poret. So with no further ado, I think we'll get going. So please go ahead with the presentation.
All right, thanks, Derek. Happy to be back to talk about Nax today. So Nax has a very simple concept, is to provide access to private equity through a listed share. And private equity, I think, is hard not to open a newspaper or website today without having headlines about a successful acquisition or sale by a private equity fund, a new fund being raised by a manager. So those headlines are part of the daily life today. And if one wonders why they should have an allocation to private equity, I think the best example to take is Yale's University Endowment. And it's arguably one of the most successful asset manager in the world with a fantastic track record. Over 20 years to last June, they provided net returns of over 11%. And surprise, surprise, Yale has more than 30% of its allocation to private equity. So the asset class plays a huge role in those returns from the endowment. So our concept is simply to allow retail investors to access private equity through a listed shares. And you see that Nax is listed on Nasdaq on the small cap list. It has a very straightforward Swedish investment company structure, a single class of share. And the main focus is on investment in Nordic private equity fund. And by private equity, we mean mostly buyout funds, so funds who are acquiring the majority of the companies where they invest, have control, and typically companies who are already profitable and in a growth or internationalization phase. At the end of the first quarter, Nax had provided an exposure to 15 different funds, so 13 buyout funds, as I mentioned, and two special situation funds, 9 managers, and 8 vintages, vintage being the year the fund is launched. So we have vintage as far back as 2007 and up to 2022 and now 2023 after the quarter. There are currently 62 portfolio companies in Nax, and to be clear, those are companies who are owned by the fund in which we invest. But since the company started, there have been 177 companies acquired, 115 of them have been sold, and the average return from those 115 exits has been 18%, which we are quite happy with. Beside the main exposure, which is private equity funds, Nax also provide a smaller exposure to a few direct investments, and that's less than 5% of our net asset value. And it's a mix of listed investment, unlisted equity, and one bond. I would point out that the vast majority of those direct investment is related to co-investment, so investment we do together with our funds, and we can get back to this a bit later. Here you see the graph showing the evolution of the net asset value over the last 4 years, and you see a nice uptick in valuation. I think it's interesting to point out that even during a difficult year such as 2022, with a difficult macroeconomic environment, the NAV has been growing nevertheless. And over the last 12 months, our net asset value has grown by almost 16%. And we even managed to grow the net asset value by almost 0.5% during the first quarter of the year. So you see a very stable growth over a longer period. What I think is very important, especially for long-term shareholders, is the distribution policy of the company. And we have quite an attractive distribution policy. As an example of over the past 5 years, the company has distributed almost 20 crown per share through dividends and share buybacks. And as an example, for last year, 2022, we paid a dividend of 3.75 crown per share, which is almost 5% of NAV and a dividend yield over 6%. And since we listed, we have to talk about the share price. It has been a good evolution of share price during this year. So year to date, I think we're up almost 25%, which is very nice to see. And nevertheless, we trade at a discount to the net asset value. And we have done so over the last few years to various degrees. The discount was almost 20% at the end of the quarter that you see here. I think today the discount is almost half of that due to the positive share price evolution. But historically, the company has traded either at a discount and during some period with a premium as well. So we'll see where that heads in the coming quarters. The data you saw earlier is related to the first quarter that we published in April. Since then, I think it's worth mentioning that we have been quite active, and I'm going to highlight 2 transactions we've made since the end of the first quarter. And the first one is a co-investment with JAB. So JAB is one of our private equity managers. They are raising very large funds, several billion euro for each fund, and they usually are thematic funds. So one fund was dedicated to food and beverage, another one, for example, to pet care and pet services, and so on. We co-invested with JAB in Panera Brands, which is a very large portfolio of brands in the US that they call casual fast dining, somewhere between the fast food and the normal restaurant service. And to give you an idea, those 3 brands, so Panera Bread, which is a bakery coffee chain, Caribou, which is a coffee chain, and Einstein Bagels, which, as its name shows, is a bagel chain. They have together over 5,000 units in the US, and their sales last year was close to $5 billion. So it's a huge conglomerate. And a very successful one. They operate with double-digit margin. A completely different investment we recently announced is a commitment to a new fund launched by Celero Capital. So Celero is a small cap manager based in Stockholm. They focus on companies active in the service industries, especially niche industry, services and consumer sectors. What is interesting with Celero is that it was started by Peter Möller, who previously was head of Sweden at a larger private equity manager called FSN Capital, a very successful one. And Nax was an investor in FSN Capital, and we've been following Peter's career for the last 15 years, and I believe he's an extremely smart and driven investment professional. So when we heard he was starting a new fund, we were not only interested, but happy to come in and support this new launch. And I would point out that we have done, throughout Nax existence, we have done a number of first-time funds, and usually those have performed really well. So they've delivered very good returns. So we continue to look at and invest in first-time funds. And I think what is nice when you invest in Nax is that you have almost a daily interaction with where your money went. So either you're going to read in the press that one of the funds where we have invested has sold a company or bought one or raised a new fund, which is fun, or you're going to go to Joe and the Juice and buy a coffee or a sandwich, or take your dog to Evidencia, or maybe buy a Krispy Kreme donut, and you know that some of the money you spent on that donut actually is getting back in your pocket through your investment in Nax. I think that's going to be it for me, Derek. So can open for some questions maybe.
Yeah, perfect. Thank you very much for a great introduction to Nax, Anne-Marie. So yeah, first off, I'd like to ask if we see what the PE market in general has changed quite a bit over the last year or so with lower activity, etc. What's your sort of experience and thoughts about this, and how has it affected Nax?
Yeah. But it's a new environment, and I say some things have not really changed in the sense that we see that the performance continues to be very strong, as you saw during 2022. I mean, our net asset value during that year raised by almost, more than 20%. So we don't see any effect on performance so far, at least in most portfolio companies. However, I think that it's a well-known fact that the financing market is more restrictive. So typically, as you know, though the funds borrow money from banks to finance part of their acquisition, and it's more difficult to borrow money today. It's more expensive, and I think this has had a dampening effect on the private equity activity. And I think so there are less acquisition, a bit less exit, and also I think a big difference is that the IPO market is closed, as everyone knows, and has been closed for most of the last 12 months. So typically, private equity manager would sell company to the stock exchange, are going to wait or sell those companies to industrial buyers or other private equity funds. So we expect the investment activity to be a bit slower than maybe during the past 5 years.
That's really interesting, and that's you recently, despite this lower activity in the market in general, you've been quite active lately here compared to before, and you also did this co-investment with Jab in Panera Brands. So does this financing climate mean also that you will probably see more opportunities to co-invest?
Exactly. I think it's a good environment for private investor like ourselves. I think that the funds are open longer for investments. You have more time to do due diligence. You get asked more often to do co-investment. So co-investment is when you invest together with the fund in a specific portfolio company. I think in the case of Jab, I think that it was, it's a very sought after co-investment. So it's more happy to be invited than asking to do it. But it's true that we have received recently more co-investment proposition from our funds, because typically instead of taking all the financing from a bank, they will ask some of their investors to provide or to invest together with them. So I would say that from that perspective, I think for an investor as Nax, it's a positive development in the current market.
Interesting. And on if we go to your most recent news with the Panera Brands co-investment, but also the Celero fund sounded really interesting, given the track record of FSN and manager there. Does this also, are there any major differences between the FSN fund you're invested in and the Celero fund in terms of underlying exposure or something?
Yeah, I think there are some major differences. So first, FSN has been one of the most successful manager in the Nordics. They had a fantastic development from lower mid-cap fund to almost a large cap fund, and a very good track record. But I think Celero is more focused on certain sector, as we mentioned, so the service and niche industries and consumers. And also the fund is much smaller, or will be much smaller, and will be active in a segment of the market where we feel there is less competition. So as you know, we have a lot of private equity managers in the Nordics, and so the competition for certain investment is quite intense. So we tend to look a lot at the segments where the funds are active and tend to prefer the segment where there is less competition. So I think that's going to be an advantage for Celero. But it's an interesting case because it's quite unique when you've been following a manager or an investment professional like Peter Möller for over 15 years, and you have a really good understanding of the track record of the work that is actually done, and that helps a lot in the due diligence of a new fund.
Yeah, sounds really promising, indeed. And if we think a bit, I mean, you clearly went through sort of some of the exposure you have in terms of the funds and some of the direct investments. Like taken as a whole, how would you say that, like, when you're an investor in Nax, what do you get exposure towards on an underlying basis? It's mainly PE funds, of course, but like from a sort of sector and geographical perspective, is there a way to give like sort of summary of that?
Yes, I think the exposure is very clearly private equity funds. So more than 95% of NAV is at the end of first quarter, or at least was in private equity funds. And I think what's interesting as you get within this exposure, investors or shareholders get a very wide diversification. There are over 15 funds in our portfolio right now, 16 now with Celero. And they're active not only in different segments, so small cap, large cap, or mega cap, like Nordic Capital or JAB, but they're also active in very different sectors. Some manager like Nordic Capital tend to specialize on healthcare, for example. They're very strong on healthcares. JAB, as I mentioned, is very focused on certain theme like pet care or food and beverage. And we have smaller funds like Valedo, who are more generalist funds. So it's really a very diversified exposure. And this is also what we are really aiming to achieve when we select new investments, to make sure that the portfolio remains very well diversified.
Great, and this might be hard to say something conclusive about, and I know myself covering investment companies that you don't always know what's going on. But you touched upon the discount to the NAV in the stock. I mean, do you have any thoughts around the latest movements? Because if you look like it, just for also the audience to know, I mean, it was. We had this tough PE market, and for a while there, a couple of quarters ago, I think the discount was up to 20, 25, 30%. Now it's down meaningfully to about around 10%, as you say, which is below the historical average, but it's also been at a premium. It's not really a low discount if you compare to the sector peers. But do you have any sort of idea or explanation of the latest movement with this going up and now down quite sharply?
Yeah. No, I think it's interesting. I think there is. I mean, as we mentioned, over the last 15 years, we've seen both relatively heavy discounts, quite a high premium, and then or trading close to NAV. And I think, from our perspective, I think we feel the company should trade at or above NAV, of course. But I think the share price, it is what it is. It's fixed by the market, and it's not so much we can comment on. But I think that probably one of the reasons why one can speculate, but the NAV or the discount to NAV has gone down, is that I think people have realized that the underlying performance is actually very strong and has been very strong for a longer period of time, even during 2022, which typically was a difficult market. So I think it also is related to investors being more aware of private equity, and that the performance of private equity typically uncorrelated to markets. So I think I see the discount becoming lower, related to investor understanding the attractivity or the attractiveness rather of private equity.
Yeah, the performance indeed has been quite strong.
Yeah, and at the end of the day, also is the performance. We have really delivered, I think, a good performance, and I think that the market recognizes that as well.
Cool. And if we dig down into the activity, sort of a bit to mention, you mentioned you've sort of increased activity further here with the Celero investment and the co-investment in Panera Brands, and before that you've invested in the JAB funds, Mimir, I think, and extended sort of or increased exposure towards Nordic Capital funds. Like from this point, how would you say that the outlook or the pipeline is looking for new investments?
I would say it's more of the same. So we're going to stick to our strategy, continue to evaluate and invest in private equity fund. I think we have in our pipeline right now quite a lot of interesting new managers. So we're spending a lot of time currently doing the due diligence of those managers. But I would say generally, I think we really want to continue to build on our successful track record and continue to deliver the same type of investment and the same type of performance over time.
Yeah, right. And do you have any, when it comes to the direct investments, they're a quite small part of the total, and I suppose the whole idea is to, even though you expanded your investment mandate, it's the idea is to invest and give supply exposure to private equity. But do you have any sort of wishes to increase direct investments as a sort of share, or is that more about being opportunistic?
No, I think it's more about opportunistic. It has been so in the past, and I think really we want to stick to our current strategy, focus on priority fund investment, and that will remain, the vast majority of our exposure. I think really direct investment is probably going to be more related to co-investment with our funds, like we have done recently with the JAB in Panera Brands. But the strategy will remain to be providing this exposure to private equity funds, because I think that's what our shareholders are most interested in.
Oh yeah. Because obviously direct exposure, but you mentioned that the IPO window is sort of closed, but just speaking of IPOs, is that something you would consider like being an anchor in an IPO, or would that like be a very special service?
Well, it's something we have done in the past and quite successfully. So I think we'll definitely look at it again when the market reopens, and I think it can be especially interesting for us if it's one of the companies in our portfolio that is doing an IPO, or a company where we have some insights or understand the industry a little bit better. But as we have done it in the past, I think it's entirely possible that we will look at it again in the future when the market reopens.
Yeah. Okay, and I think finally from my side on shareholder distribution, you mentioned you have a very strong dividend track record now, and looking historically, you've also been quite active in terms of share buybacks. I know it's sort of a board decision, but what's your thinking there? Will the buybacks occur when you think the discount is too high, or like when you...
Yeah, as you mentioned, it's a board decision, but I think that, of course, the board take into consideration what is most value accretive for an investor. Is it to buy back our shares, or is it to allocate the money to new investments? And I think that's the exercise the board is doing on a constant basis. But of course, I think if the discount is relatively narrow, I would expect that it's better value for money, or more value accretive for shareholders to make new investment rather than buying out shares. But the company has a mandate to buying back shares, so it can do so whenever the board feels it's appropriate.
I agree. Yeah. Cool. I think that the time is running up, and I think great presentation and really good answer. So thanks again.
Thanks a lot,
Marie and Nax, and that wraps up this presentation. Yeah.
Thank you.
Hej och välkomna allihopa till nästa presentation här på ABG Investor Days. Mitt namn är Simon Granat. Jag jobbar som aktieanalytiker på ABG där jag följer IT- och teknologibolag. Och idag så har vi nöjet att presentera Daniel Krok, vd på Bredband2, som under de kommande 20 minuterna kommer presentera bolaget och därefter så kommer vi följa upp med en kortare frågestund. Så med det sagt, Daniel, vänligen presentera.
Toppen, tack för detta. Som nämnt så heter jag ju då Daniel Krok och har varit vd här i drygt 15 år. Så det har varit en lång och spännande resa från ett väldigt litet och skrangligt bolag till det vi är idag. Och det som känns ännu bättre är att vi har väldigt mycket spännande framåt också att göra här på marknaden. Agendan kommer vara först lite kort om Bredband2 som bolag. Och sen så varför det kan vara intressant att investera i Bredband2. Och sen har vi då relativt färska siffror. Q1, där vi även blickar lite framåt kring det. Och sen framtiden var vi liksom verkligen fokuserade. Vi ser att vi kan göra skillnad. Och frågestund. Det hoppas vi alltid på spännande frågor som vi kan besvara. Och jag hoppas att vi kan lägga mest tid på just den delen här framöver. Kassaflöden, det är ju alltid bra. Och vi har väldigt bra kassaflöden, stabila kassaflöden. Vi har återkommande intäkter både från privatsidan och från företagssidan. Det ligger ju i abonnemangsform. På privatsidan så är det mer liksom rörliga abonnemang som ligger och löper. Ofta egentligen ingen bindningstid, vilket jag tycker är väldigt positivt. Att kunderna har friheten och möjligheten att faktiskt välja fritt. Och det kommer mycket ur de här så kallade öppna näten. Och sen så på företagssidan, där det kanske krävs en viss investering för att etablera infrastrukturen. Då är det oftast 12 månader, 24 månader, 36 månader. Men det skapar ju väldigt stabila kassaflöden. Och 99% av intäkterna är just återkommande. Tittar vi på förra året, omsatte ungefär 1,5 miljard i bolaget. Historiskt så har ju Bredband2 växt organiskt uteslutande fram till att vi genomförde ett förvärv av A3 i slutet 2020. Det har varit mycket arbete med det och vi har kommit väldigt, väldigt långt på det genomförandet. Har närmare en halv miljon kunder idag. De flesta är såklart privatkunder. Och här är det ju viktigt, utöver, nu pratar vi fiberkunder, och här är det såklart viktigt för oss att jobba vidare aktivt med att bygga på de här relationerna och tilläggstjänster och diverse andra saker som vi jobbar med. Det här är vår vision. Vi är ju måna om att inte bara leverera en uppkoppling, utan vi vill ju även att det ska vara en smidig och trygg digital vardag för alla. Alltså att det kan finnas en trygghet i hur man agerar i den digitala miljön. För vi vet ju alla att man är utsatt både som individ och som företag från diverse olika attacker, och det kommer bara öka. Och tyvärr är kunskapen mycket, mycket lägre nu, eller den är låg, även den har ökat. Men vi vill ju se till att göra detta enkelt, för det är komplext, men vi försöker skapa en enkelhet i detta. Och där i ligger just den här visionen. Tittar vi på fiberkartan idag, Telia är ju störst. Och de investerar också mycket i ny infrastruktur. Och sen har vi Telenor som är tvåa på kartan. Och de har ju förvärvat diverse olika varumärken under årens gång. Vi har allting från Glocalnet, vi har Bredbandsbolaget, vi har Onet och diverse bolag som har förvärvats in för att hålla den positionen. Och sen så har vi oss på då tredje plats och Bahnhof som kommer därefter. Och sen har ju Tele2 och Comhem gått samman. De är ju väldigt starka på coax, alltså en annan infrastruktur. Men just på fibersidan så kommer de ett litet hack efter, även om de jobbar intensivt med den förflyttningen. Tittar man på de olika verksamhetsdelarna så är ju datakommunikationen, alltså uppkopplingen, vår absolut största tjänst. Där ligger ju den större delen av vår omsättning idag. Och det är på något sätt nyckeln till relationen med kunden. Att man får en uppkoppling och utifrån den så kan vi bygga vidare helt enkelt. Telefonibenet, A3-förvärvet, där fick vi ju ett mycket större och starkare telefoniben. Mycket kompetens in i detta. Och där vill vi såklart jobba vidare med. Vi har mobiltelefonin som kommer där. Vi har mobila bredbandet där vi ser liksom att den tjänsten också börjar bli mer och mer attraktiv på marknaden. Och sen har vi såklart alla olika typer av växellösningar på företagsmarknaden. Datacenter. Vi har ett eget datacenter. Men det var egentligen mer på grund av att vi fick en möjlighet i Malmö som var för god för att inte ta. Annars så vill vi generellt sett undvika framtunga investeringar. Undvika att investera i passiv infrastruktur. Undvika att investera i dyra datacenter. För det finns en risk i det momentet och det driver väldigt mycket kassa. Så att vi vill istället jobba med att ha en hög flexibilitet, att kunna anpassa oss efter hur marknaden ser ut och hur marknaden svänger och sen utnyttja andras investeringar i de här infrastrukturerna. För det finns ju väldigt tillgängligt. Fiberinfrastrukturen är tillgänglig, datacenter, det finns hur mycket tillgängliga datacenter som möjligt. Och på detta så bygger vi våra tjänster. Och det är ju det som är nyckeln, att man har full driftskontroll på sina tjänster. Alltså vi etablerar aktiv utrustning, hårdvara, som skapar driftskontroll. På samma sätt när det gäller datacenter. Så det är så vi bygger vår affär. Så vi har ett eget nät som vi kontrollerar precis på samma sätt som alla andra operatörer. Det finns ju ingen som äger fullt ut sin passiva infrastruktur. Och sen har vi säkerhetsbenet som är det lite nyare. Och där kommer vi ju fortsätta öka satsningen för att kunna då ha kundens kommunikation, uppkoppling. De kan kommunicera via telefoni och sen så är de skyddade i den miljön. Och här finns det ju framförallt på företagssidan väldigt många möjligheter att jobba med detta benet. Vi vill dock undvika konsulttunga tjänster. För historiskt så har detta benet präglats fortfarande av mycket konsulttid. Och vi vill ju bygga smarta lösningar som är skalbara, som hänger ihop med de tjänster som vi levererar idag. Och där utgår vi egentligen från den utrustning som vi redan idag sätter hos en företagskund för att också på distans kunna administrera de olika tjänsterna som kunderna önskar. Och då kommer vi till den senaste rapporten. Och här har vi ju lite nyheter. Vi har bland annat lagt in ett nytt nyckeltal, EBITDA, just för att det kommer ibland frågor, ja, men vad tycker ni att ni har fått ut från förvärvet A3? Och man kan göra benchmark mot bolag som Bahnhof till exempel. Och då är det väldigt viktigt att man jämför äpplen med äpplen. Och Bredband2 historiskt, om man tittar på 2020, då hade Bredband2 i rörelsemarginal 9%. Och det talet ska ju då jämföras egentligen med EBITDA, alltså när man har rörelseresultatet, man lägger tillbaka förvärvsavskrivningar, för att Bredband2 hade ju inte förvärvsavskrivningar. Och när vi nu indikerar att vi ska nå en rörelsemarginal på de här 7,5 i Q4 och man lägger tillbaka det, så innebär det egentligen att vi är i princip på 10% jämfört med Bredband2s 9%. Och det var ju hela ambitionen med förvärvet. Att A3 som hade 0 i rörelsemarginal, att vi skulle lyfta in det och uppnå våra nyckeltal till en början. Och sen med den ökade volymen så ska vi då ha lyft allting upp till en högre nivå. Och det är precis det som vi ser framför oss att vi ska ha gjort när vi kommer in i 2024. Sen är det viktigt såklart att vi jobbar med tillväxten. Och det är också det som är fokus när vi kommer in mot slutet 23 och sen 24. För nu jobbar vi ju mycket med att lyfta marginalerna. Och jämförelsetalen är egentligen inte riktigt rätt att ha från Q1 22. För där hände mycket, vi sålde A3 IT och så vidare. Utan det är egentligen från Q2 22, där det var 5,5. Där vi nu har lyft på de här 3 kvartalen upp till 1 procentenhet, alltså 6,5. Och nu ska vi förbättra oss ytterligare med 1 procentenhet fram de här 3 kvartalen som kommer till 7,5. Så då har vi gjort den här marginalresan som har varit en viktig del av just att ta hand om förvärvet. Så det känns väldigt, väldigt bra. Och sen så ser vi ju som sagt att omsättningsökningen ska komma här från nästa kvartal och framåt. Och det är lite olika delar i detta som gör att vi ser att det kommer röra på sig. Allting från att företagssidan börjar få en bättre utväxling. Vi ser att privatsidan, det har mycket att göra med hur vi håller emot med diverse prishöjningar som genomförs. Och de prishöjningarna genomförs ju både utifrån scenariot att vi ska matcha upp till eventuella nätavgifter som ökar, men även då lyfta marginalerna på relevanta tjänster helt enkelt. Så det är ett positivt bra arbete som pågår här. Och här är lite av historiken. Och det är ganska uppenbart när förvärvet av A3 kom in i kurvorna. Framtiden. Utöver säkerhet, men också som en del av säkerhet, så är det just att öka digitaliseringen. Vi har ju alltid varit väldigt fokuserade på att ha hög effektivitet, alltså automatisera så mycket processer som möjligt. Vi har ett egenutvecklat system som heter BOSS, som är ryggraden i hela bolaget. Och det är ju just för att hålla en hög effektivitet, vara en slimmad organisation, jobba med skalbara tjänster så att vi får ut liksom max. Och det ser vi ju väldigt, väldigt tydligt om vi gör den jämförelsen egentligen från personalkostnad mot andra bolag som är i samma bransch, att vi är effektiva. Och det är precis det som är målbilden. Och det handlar ju både vilken tjänsteflora och produktflora som man vill ha, och sen även hur man jobbar internt så att liksom allt ska ju rinna genom bolaget. Det i sig förbättrar ju också servicen. Så att om vi har hög automatisering, alltså mindre manuella processer, så kommer vi också säkerställa att vi kan hålla en högre servicenivå, som är såklart en oerhört avgörande och viktig del. Så att automatiseringen har vi jobbat mycket med, och nu vill vi stärka hela det digitala fönstret ut mot marknaden. Vi vet ju att kunder till mycket, mycket högre grad fattar beslut utifrån att göra en egen benchmark och sen så ta en kontakt. Och då ska det ju vara enkelt och smidigt, och man ska kunna egentligen genomföra alla typer av köp och förändringar, även när man är kund, digitalt. Så där pågår ett stort och aktivt arbete med just den här typen av aktiviteter i bolaget. Så det var väl lite kort kring Bredband2 och vad vi är idag. Då hoppas vi på lite spännande frågor.
Mycket bra. Tack så mycket för presentationen, Daniel, och ett nöje att ha det här som alltid. Jag tänker att vi går till ett återkommande tema, och det är prishöjningar. Jag vet att du talade lite om det under presentationen, men hur ser ni på prishöjningar in i 2023? Vad har hittills genomförts och hur ska vi tänka på det kommande 2-3 kvartal?
Yes. Nej, men vi kan väl säga att om vi backar lite tillbaka till förvärvet av A3, så jobbar vi egentligen i 3 faser. Fas 1 som genomfördes 2021 handlar ju om att vi slog ihop alla varumärken till ett, vilket var en stor förändring. Det påverkar kunder och då blir det ju alltid en rörelse i kundbasen. Samtidigt så var det att få ihop infrastrukturen till en infrastruktur. Det tar tid, det är mycket som måste liksom genomföras för att liksom inte äventyra driften. Och där kan man egentligen säga att det är först nu vi kan säga att nu har vi en infrastruktur. Och det gör också att många av de här kostnaderna försvinner successivt över tid. Det är en del i marginalförbättringen också. Och sen är det såklart organisationen, där vi gjorde stora förändringar under 2021. Så sen när vi kom in i 2022 så ville vi ju tidigt visa, okej, hur står vi oss på marknaden med ett varumärke? För det är ju inte helt givet att ett varumärke är lika starkt som om du har 4 eller 5 varumärken ut mot marknaden. Och då tryckte vi på gasen både marknadsföringsmässigt och kampanjmässigt och prismässigt och så vidare. Och det är där vi ser också att vi kanske kommer ner lite i marginal till de här 5,5 som jag nämnde Q2 22. Men vi såg också att vi fick fart på kundtillväxten. Och det var ett viktigt bevis att vi kan vara starka på marknaden och kan se tillväxt. Och då kom vi in i fas 3 där vi jobbar med förbättrade marginaler. Och i det arbetet, förutom att man gör massa kostnadsbesparingar såklart, så ligger det ju prishöjningar så att vi når rätt marginaler på produkter och tjänster. Men det är inte bara liksom att vi höjer priset, utan det är också för att försvara eventuella kostnadsökningar som kommer på nätavgifter. För den stora delen av kunderna som vi har ligger i så kallade öppna nät. Det är en rörlig avgift på en aktiv kund för en viss tjänst som vi betalar. Och höjer de priserna på det så behöver vi såklart försvara det. Och där har vi ju sett att framförallt Telia har kommit ut med 2 prishöjningar. En i februari. Kort därefter så annonserar de en mycket större prishöjning som kommer slå igenom i juli. Så att det är en del i att också försvara den typen av kostnader. Plus att vi ska förbättra marginalerna helt enkelt. Så att vi följer det hela tiden. Om det är någonting som sker på kostnadssidan eller om vi ser att vi ligger fel på marginalen. Och det arbetet ska vara genomfört fram till slutet av året. Det pågår egentligen hela året, den typen av aktiviteter. Sen finns det alltid en kundrörelse tidigare än att prishöjningen slår igenom. Där vi informerar kunder i 3 till 4 månader innan att det ska komma en prishöjning. Och under hela den resan så blir det liksom en rörelse. Och det har vi sett, att vi har ju haft en visst ökat tapp i både Q4 och här i Q1. Och sen så kommer prishöjningarna komma i effekt lite senare. Så att det är väl inte så man kan säga på det.
Mycket tydligt. Tack för
ett långt svar.
Ja, omfattande men ändå tydligt. Tack så mycket för det. Och du var inne lite på det att nätverksägarna har börjat höja priserna. Och de började nog redan göra det under 2022 och så fortsätter man in i 2023. Hur tror du att, om du skulle spekulera, hur tror du man kommer att agera in i 2024? Kommer man fortsätta på samma manér eller har man tagit lite stora kliv på kort tid här nu?
Det är inte alla som höjer, utan man kan nästan dela upp det i 2 delar. Det finns de lite mer kommersiella nätägarna som ju är just Telia och sen har vi Global Connect, alltså tidigare IP Only, som är en stor nätägare också. Och sen så har vi vissa lite mer kommersiellt inriktade aktörer. Där har vi sett att man har jobbat, eller framförallt nu jobbar med att höja prisbilden en del. Och det är ju också för att det finns en underliggande press på kostnadssidan rent generellt. Alltså med elpriser och nu har vi hela löneförhandlingen som ju också har en påverkan och så vidare. Så att det är ju inte helt oväntat att det sker saker. Men jag tror inte att det kommer vara i den omfattningen som vi såg nu. Telia har gjort 2 steg och en ganska stor prishöjning i juli, att det skulle fortsätta. För någonstans så finns det ju en gräns för att man riskerar att kunder söker andra alternativ. Och då förlorar de ju på det också. För de får ju bara betalt för kunder som faktiskt väljer att vara aktiva. Och sen har vi de här kommunala näten. Det är allmännyttor, det är kommuner och så vidare. Och så vidare. De nätägarna har ju ett politiskt intresse där de vill att regionen eller staden har god tillgång till bra infrastruktur, för det gynnar liksom hushåll, det gynnar företag, det gynnar även liksom, skola och eventuellt sjukvård som blir mer och mer digitaliserat och så vidare. Och så vidare. Så att där ser vi inte riktigt att det sker den typen av prishöjningar. Och det är en ganska stor del av marknaden också.
Och de saker du är inne på nu, tror du att det gör att fiber i det stora hela sticker ut lite mot andra? Om vi tar mobiltjänster exempelvis, så kunde man se att när den marknaden började penetreras på riktigt och stagnera så har intäktsgenereringen per kund kommit ner faktiskt något. Medan för fiber så har den kontinuerligt ökat. Tror du att de här sakerna också talar för att fiberintäkten per kund för samhället som stort kanske kommer öka under en längre tid framöver också?
Ja, för det finns ju en annan drivkraft och det är ju att kunder vill ha högre kapacitet. Och då blir det ju per automatik också dyrare tjänster. Och där ser vi också att nätägare, även de kommersiella, har blivit bättre på att dra ner kostnadsnivån på liksom 500 megabit och gigabit-tjänsten. Så att den helt plötsligt blir mer attraktiv. För det är också sätt för dem att förbättra sin ekonomi. Inte bara höja avgifter utan även se till att många kunder, vilket vi alla vill, kommer upp på högre kapacitet. För det gör ju att tjänsten också blir en bättre tjänst. Men det ökar också snittpriset såklart på tjänsterna. Och det tror jag kommer fortsätta från kundsidan.
Sedan är en satsning ni gör på företagsaffären. På senare tid så har ni centraliserat era enheter där, som ni skriver i rapporterna. Hur ser ni på företagsaffären kommande kvartal och kommande år också?
Ja, alltså vi har ju alltid känt att vi har mycket mer att göra på företagssidan. Vi kan absolut matcha upp till vilken aktör som helst på produkt- och tjänstesidan. Men det är ju också liksom många kundval på det större segmentet är ju lite trygghetsval. Man väljer gärna liksom Tele eller den typen av varumärken. Så vårt fokus har vi ju identifierat att det är små och medelstora företag som är rätt marknad för oss. Och där är det också lättare att jobba med det som jag nämnde här kring digitaliseringen. Att kunderna ska kunna administrera så mycket som möjligt själv från första köptillfället till alla typer av förändringar. För det är lite mer standardiserade, lite mer raka tjänster och skalbara tjänster. Så att det är där vi lägger fokus. Den här centraliseringen, det byggde egentligen på att när vi gjorde förvärvet av A3 och fick in den säljorganisationen så hade de kanske lite mer av en storbolagsstruktur. De har varit med i Kammarkollegiet och så vidare. Som vi valt att inte gå vidare med. Just av den anledningen att vi vill liksom jobba med den här andra typen av tjänster. Och där är det mycket innesälj också i små och medelstora företag. Och då var det logiskt att centralisera. Sen tar det ju tid för att en säljare ska lära sig bolaget, lära sig tjänsterna, bygga liksom en pipe med potentiella kunder och sen genomföra en försäljning. Men där ser vi på säljnivå att det liksom växer hela tiden. Så att det känns väldigt tryggt med att vi kommer lyckas med den satsningen. Och vi ser redan liksom att det ger effekt.
Mm. Och sedan så tänkte jag också på kostnadsprofilen. Där har ni tydligt kunnat höja marginalen, mycket till följd av kostnadssynergier efter förvärvet av A3, vilket vi talade om tidigare. Hur ser du på kostnadsprofilen in i 2023 nu när de olika enheterna har konsoliderats fullt ut?
Mm. Ja, vi kan säga det är en ganska stor förändring på det som är servicecenter, alltså supporten. Där hade vi tidigare en struktur där en rekrytering i en konsultform. Så att man hade dem inne i 6 månader, den personalen, som konsulter och landade på övriga kostnader. Nu har vi helt tagit bort det. Så att övriga kostnader kommer liksom minska ganska tydligt och så blir de liksom anställda direkt. Och det finns ju massa olika faktorer i detta. Det är allting från att vi ser att vid rekryteringstillfället så är det lättare liksom att motivera någon som faktiskt blir en bredband 2-anställd och att det ökar lojaliteten, alltså minskar omsättningen på personal. Plus att det finns en kostnadsdel i detta som gör att totalkostnaden minskar en hel del också. Mm. Så att det är en bra förändring och det kommer synas i siffrorna när man jämför liksom historiskt. Och sen är det ju massa andra kostnadssynergier som slår igenom. Som jag nämnde med infrastrukturen. När det nu är en infrastruktur så är det lättare att synliggöra de delarna som faktiskt inte hör hemma i den infrastrukturen som man kan liksom ta bort. Och det har och kommer slå igenom under hela det här året också. Mm. Så att vi kommer se framförallt på övriga kostnader att det kommer hända en hel del.
Mm. Och vidare var du inne på under presentationen också med uppförsäljning av er nuvarande kundbas. Ni har många kunder som det ser ut idag och avser addera på fler tjänster. Hur jobbar ni rent konkret med att addera på mobiltelefonitjänster med flera säkerhetstjänster?
Ja. Och man kan säga, det givna tillfället är ju när kunden blir som en ny kund. Vid det tillfället när vi möter kunden. Då ser vi ju tydligt att det finns en ökad andel som köper diverse olika tjänster från router och säkerhetstjänster och så vidare. Jämfört med vår befintliga kundbas. Så att uppenbart så finns det liksom ett ökat behov. Så att där har vi ju jobbat mycket med att liksom ha en löpande kontaktyta och också få kunder i högre grad att gå in på mitt bredband 2. Och det ser vi också tydligt att vi ökar den trafiken dit. Och där är det ju en väldigt bra möjlighet att faktiskt jobba närmare kunden och se vad är det för behov och att de återigen enkelt kan göra eventuella köp eller förändringar som de vill ha i den miljön. Så att det är en väldigt, väldigt viktig del i det här, som jag nämnde också, digitala fönstret. Att få kunder att i högre grad vara närvarande där och känna enkelheten i att göra köp eller tillägg.
Mm. Tydligt. Tänkte avslutande tala lite om kundintaget som har sett starkt ut under många år på raken och så har det kommit ner lite nu på senare tid. Delvis som en funktion av att priserna har förändrats i marknaden och att det har skapat en ökad rörlighet. Hur tycker du man ska se på kundintag kommande åren? Även kommande kvartalen, du var inne lite på det här att ni höjer priserna även nu här på kort tid. Ska man lägga mindre vikt på det, givet hur marknaden ser ut? Eller är det fortfarande ett prioriterat område? Vad ska vi se?
Det är ett prioriterat område för oss, absolut. Men vi ser ju att det är viktigare för oss i nuläget att liksom jobba upp marginalerna innan vi trycker liksom gasen i botten när vi kommer in mot 24. Om vi nu pratar isolerat fibertjänsten. För det är alltid så med förändringar så kommer det öka rörligheten. Men vi ser samtidigt att vi har ett starkt bruttointag. Och det känns väldigt positivt. Vi vill ju vara liksom en prisvärd aktör på marknaden. Och tittar man på klimatet som är just nu så bör det vara en fördel för oss framåt också. Som ni vet, vi är effektiva. Vi har liksom en låg kostnadskostym som gör att vi kan hålla bra marginaler och bra priser. Och det ser vi ska vinna marknad. Så att det kommer absolut vara prioriterat. Men vi är medvetna om att under de här prishöjningstiderna så kommer det finnas en rörlighet. Så att vad det sen innebär exakt, det är ju väldigt svårt att veta. Men vi ser ju att vi har ett nettotapp både i Q4 och Q1.
Och som du lyfter fram så är det här också inbakat i marginalprognosen som ni ger för Q4.
Definitivt så. Alla de här delarna med nätavgiftshöjningar och även hela löneförhandlings, kollektivavtal och så vidare är ju med i detta. Så att också så finns det en underliggande tryck kostnadsmässigt rent generellt. Men allt inräknat så ska vi fortfarande se till att förbättra med 1 procentenhet till.
Strålande. Vi nämner oss en slutparentes här, så jag får tacka dig för att du har tagit dig tid att komma hit idag och presentera Bredband2 och tacka alla åhörare också för att ni tagit er hit. Så tack ska ni ha.
Tackar.
Hi and welcome everyone for the next presentation. My name is Daniel Thorsson, analyst at ABG, covering IT and technology companies. The next company presenting for us is Proact with CFO Linda Hölje. So I'll let you start your presentation about Proact and I will follow up with a couple of questions in the end.
Thank you so much. I'm happy to be here. So I will talk about, let's see if this works, yes. Today, an introduction to Proact, who we are, the market we're in, for those of you who may not be so familiar with us, and then I'll talk about the latest development, including financials for us. So who is Proact then? We've been around for 30 years soon and are specializing in data management. So we're not a generalist, but an IT specialist company. Present all over Europe, primarily the Northern Europe, focusing on primarily its larger, medium, large-sized enterprises, public agencies. We're soon at 5 billion SEK in turnover, listed on the Nasdaq Stock Exchange, and we have 1,200 talented employees that help us deliver value to our customers. Very briefly then, the key trends that we leverage when we provide our solutions to our customers. First one, of course, is the general trend of business transformation, digital transformation, which is all done through IT and where data is key. The key technology trend that we also leverage on is the use of hybrid cloud to do that. And I will talk a little bit more about what we mean with hybrid cloud and why we think we're well positioned to leverage on that trend. But generally, we see customers moving increasingly to cloud-type solutions due to the increase of speed, flexibility, and availability of their data. Security, of course, becoming increasingly important with all of we see the ransomware attacks, cyber attacks we're seeing, so that we are able to ensure cybersecurity and provide services there is a key enabler for us. GDPR, of course, also key whenever you talk about data in an EU context. And then last but not least, we see increasingly how IT is helping to drive sustainability, a key enabler, and making sure that we're enabling our customers to deliver value in a sustainable way is also one of our focus areas. So our offering then, we typically visualize it like this, a wheel. We deliver it as hybrid cloud, as I said, or private cloud, on-prem, public cloud. We do it in different areas. We typically help customers advise our customers in how they can put up the most efficient architectures and structures that work for what they want to achieve. We store the data. That's our history, where we come from, providing storage solutions in different ways. We also connect the data so it can be moved to where it needs to be. And then we have the protection and security aspect of it, cybersecurity services, backup services, disaster recovery services. And then we help drive value through the data. So we make sure that the solutions we deliver to our customers are fit for purpose when it comes to AI or analytics, compute, or any types of applications. The hybrid cloud model then that we think is a key enabler and key differentiator for us. If we go a little bit more into detail on that, we can have data, of course, or the infrastructure to manage the data in three different places. It's in the customer data center, so on-prem. It's in one of our data centers, so it could be as a private cloud, or it's in what we call the public cloud, which we mean being these hyperscaler data centers, so the Google, Amazon, Microsoft clouds. We deliver on-prem solutions to customers, sell it. That's what we define as our systems business. If for those of you who read our reports, the systems and the support and professional services around that. We can also deliver it as a managed cloud services, so a private cloud for our customers. We can deliver this from our own cloud or our own data centers as a managed cloud service. Or we can help the customer bring their data and manage it in a public cloud, which is not as easy as some may think. Typically, we see that it becomes pretty complex. Costs can increase a lot if you don't manage it in a structured way. and then the hybrid cloud then is combining it all together. And that's what we see a key advantage for us, being able to provide all of these three types in any way that the customer wants. And we see that our customers like what we do. We have strong eNPS scores, 46 in our latest survey from last year. So we're very happy that we're able to deliver the value that we want. And as I said, sustainability is also a key focus area for us. Being in the data center related space, we of course work a lot with our employees, diversity, leadership skills, making sure that we provide a good workplace. We also make sure that we have a good view of our supply chains, our customer value chains. The key environmental impact we see is through our data centers, so the environmental impact there. So that's one of our key focus areas, make sure we work with renewable energy in a very energy efficient way and design services that consume as little energy as possible. Then another important part of our strategy and how we grow is through acquisitions. So we have a target we're saying where we want to grow by about 10% annually, and roughly half of that we expect to come from acquisitions. So this is a list of our 5 latest acquisitions, where we typically focus on finding companies that help us on our strategic journey. So you will see that all of these are cloud or cloud-centric companies, typically services companies. A lot of them are either managed cloud services companies, or lately we've been acquiring consultancy companies. We see that the competence, especially when it comes to moving to the public cloud, is a really scarce resource, and acquiring these companies helps us build those competencies quickly. We can leverage that when we advise our customers how to move to the public cloud or the hybrid cloud. So using both our consultants and then having that as a step into onboarding our customers to our managed cloud services solutions. That was the quick overview of what we do and why our customers buy from us. Then a little bit of highlight on our first quarter results. So we see strong revenue growth. We had very strong revenue growth all of last year, and we see that continuing in the first quarter this year. We had 15% growth overall, grew revenues to 1.2 billion SEK. We split our business into the systems business, then that's the resale of hardware, software. That's the part of our business that's a little bit more volatile, can depend on customer buying cycles, if we get a couple of big deals in one quarter or not. Saw strong growth all of last year, continuing with a 14% growth rate this year, up to 700 million SEK. Our services revenues are typically more stable. We have 3 different services streams. We have our support services, which are tightly connected to our systems sales, one of our recurring revenue streams. Then we have professional services, so the consulting business, which helps both when it comes to advising, installation, etc., for our systems business, but also the consulting around our managed cloud services. And then last but not least, then our managed cloud services offering, which is what we see as our key growth area going forward. This is where we see the biggest market growth. And both the support and the managed cloud services were growing very quickly as well in the first quarter. Professional services, actually a little bit of an organic decline. We acquired a company, Sepago, last year, so in total also growing a lot, but we're still having a little bit of difficulties filling all of our vacancies. So we're still seeing a war of talent in here, so a little bit weaker there. But overall, very strong growth in the first quarter, both in total as well as organically. And the revenue growth then in turn led to growth in adjusted EBITDA. So grew by 8.5% to a margin of 4.7%. Whereas our profit before tax then stayed flat at 37 million SEK, where we have the impacts of increased amortizations from our acquisitions and increased interest rates that are impacting here. Then if we take a step back, then we have communicated a number of long-term targets. These are the ones you see here, and we typically track them on a 12-month rolling basis. So if we look at then in Q1, where were we on a 12-month rolling basis? The total revenue growth, we have a target of, as I said, 10%. It grew at 33%, so significantly overperforming. You can see on the right-hand graph here at the side, we have the 10-year revenue development. You'll see that in 2020, 2021, we had a little bit weaker growth, especially 21, where we had both customers delaying investment decisions as a result of COVID, late 2020, but also all into 2021. And then end of 2021, we were hit by the semiconductor delays that pushed deliveries into 2022. And then we recovered that nicely in 2022, where we've seen very good demand for all of our offerings, which we then continue seeing into the first quarter of this year. So close to 5 billion now in rolling 12 months revenues. The EBITDA margin on a 12-month rolling basis, 6.5%, so slight decline from where we were last year. And here we have a target of 8%. So this is something we're working a lot towards. And for those of you who read our quarterly report, we are in the process of initiating a cost-saving program to make sure that we recover the cost increases that we've seen and continue tracking towards that 8% margin target. Our net debt over EBITDA target is below 2. We're quite a lot below there, 0.5. So we feel that we are well positioned to continue on our acquisition strategy. We have a balance sheet that can support it. We also want to make sure that we generate good return on our capital. So our return on capital employed target is 20%. The outcome now was just about 17. So also a little bit behind the target. And the last, we have a dividend policy. We want to distribute around a third of our net income. The dividend that we just distributed was at 1.85 SEK per share, so that's 27%. So right in the middle of the dividend or policy target as well. And the graph here on the bottom, you can see our 10-year EPS development also, that we believe we have done quite well over the past 10 years, moving revenues and then profitability even more. Although key going forward here will be our margin target and how we reach that. And then the last slide. So I think I will have more time for questions. But in summary, we believe we're well positioned. We have a strong portfolio and a good position in the growing hybrid cloud market, where we believe the majority of the demand will be. We see very few customers going all the way to public cloud. They all will typically keep some things on-prem or in private clouds due to security concerns or legacy applications that don't work in the public cloud. We see that manifestation in our top line growth that continues in Q1. And we are in particular then want to highlight our recurring revenue growth, which is our managed cloud services and support services. So our contracted revenues continue to grow both from last year, but also on an individual quarter by quarter basis. So also continue to grow from last quarter, 2022.
Linda. I obviously have a couple of questions. First of all, you are geographically quite spread out across Europe, with Nordics, Germany, UK, Netherlands being the largest markets. Can you share any trends you see in those markets? Are there any that is particularly strong or weak versus the others?
So we can see that if we look at the sort of short-term trends in the first quarter, we have, and also end of last year, we've been very, very strong in the Nordics, especially the systems market has been very strong there. We have had a weaker market in the UK in particular in the last quarter, although we believe that's more of a short-term issue. Then the longer-term trends we see primarily in West, we see that the transformation to cloud goes fast there. So we've seen over the past few quarters, or longer than that, couple of years maybe, that the systems market has been declining, but we've seen very good growth in the managed cloud services. So we see that continuing there. Although there's also more of a war of talent, a bit of pressure on costs as we compete for those talents or have to use external resources. And then central, I think, is somewhere in the middle, also moving towards cloud. So we see demand for that. Systems business still strong. If we look anything on the macroeconomic trends, that's in Germany, that's where we see a little bit of worries. Not specifically for our offerings or customers so far, but we see that consumer type companies are struggling a little bit and postponing investment decisions. But just generally, we're not seeing any significant downturn in our demand. We read all about the macroeconomics, but we're not generally seeing it anywhere right now.
Interesting. And if you look at the customer types that you have the public sector across the markets, you have large enterprises and also SMBs. Do you see any trends there that have changed recently, or maybe you expect changing throughout 2023?
So we see, the public customers are always stable, and we see them continue to be stable. When we have more uncertainties in the macroeconomics, typically they still get their budgets to help the economy. So we see them continuing to be strong. We see some larger enterprises, the ones, if we have the large ones that do have their own cost-cutting initiatives, etc., will of course look over their investments and maybe slower in investment decisions. So that's one of the things that potentially would happen or could happen in a downturn scenario. And then the SMBs, I think, are very, very different, but depending on where they are, in which segments. Of course, the segments that are not doing well will also postpone, typically, in the investments.
Yeah.
And then in some cases, we will see the opposite, that they will invest in IT to become more efficient and to try to get them out of the economic situation as well.
I see. And if we look at the large enterprise customers, for example, do they see IT as an enabler to become more efficient ahead, or do they see that as an easy decision to postpone and delay investments in IT, which could hurt you negatively? How do you view that?
So it's both. So well, first of all, it's of course the data continues to increase. So when you run out of storage, or you will need to invest. Also, typically, there's a good TCO, total cost of ownership calculation, to be done once your equipment becomes too old, so you will save money from investing. So I think what we've seen historically in historical downturns is that customers continue to invest. At some point, they may slow down the decisions. They will have some sort of investment halt, or it needs to be escalated somewhere, so it sort of slows down. But they don't sort of stop investing. So typically, that's what we see.
Looking at the cloud market and the cloud trends we see, all of the public cloud vendors that you mentioned are raising prices at the moment, but their growth is slowing. So one can imagine that the implied volume is not growing as fast as historically. Does that create a situation for you that is problematic because it becomes more costly for your customers to migrate to the cloud, or does it become an opportunity for you to compete with the hybrid cloud in a better way versus the pure 100% public cloud?
I think we primarily see it as an opportunity, actually, because I think, one of the things when we help the customers move to the public cloud, one of the things we help them with is to do it in a cost-efficient way, but also our solutions become definitely more attractive when comparing to a more expensive public cloud offering.
How much of the cloud-related revenues today come from pure reselling of public space versus the hybrid or the managed service cloud that you host, which I imagine has a higher profitability at least?
So I think, we typically don't sort of purely resell public cloud. We do it in the context of a sort of a bigger managed cloud offering, because typically it's lower margin and it's not the type of value-added services that we want to provide. But it's sort of pure reselling. It's a small part of the total managed cloud service.
Okay. And then looking ahead in the coming quarters and the rest of 2023, as you said, 2021 was a tough year for you. You couldn't really deliver on the demand you had. You ended the year with a strong order book. And then 2022 was really delivering on that order book, growing a lot last year. Is there a risk that we will see negative growth this year in a few quarters, or how should we read the 2-year trend here?
Yes, so I think we don't give forecasts, of course. Our ambition is to continue growing, definitely. But as you know, when you followed us, the systems business is a little bit volatile quarter by quarter and difficult to predict. But we do expect the long-term trend of sort of even the systems business growing. So looking at the 3, 4, 5-year trend, we still expect it to grow, and we think that we had lower organic growth for a few years, and then back to positive at 2022. That overall we should be able to sort of continue growing, but not with a lot.
Yeah, and the systems business, that's around 60% of revenues today. What does it need to be for you to achieve the 8% EBITDA margin target here? I guess the profitability is higher in the service part.
It is. It is. I think we typically aim for this 50-50 split, but it's not necessary because we see it takes because we're not giving up on our systems business, so we don't want it to decline. So it'll take a little bit of time to get to 50-50, but that's our goal. And if we're there, definitely we could reach the 8% EBITDA margin target.
Yeah. Anything else to drive the margin up to the target? Anything else you need to do better in your existing business, or is it by acquiring higher margin businesses purely ahead?
No, we have the mix effect, we have the acquisition effect, and then we also believe that we can improve our services margins further, especially in the cloud services. We see scale effects. A lot of our services, we can bring on more customers to the platforms without increasing costs. And we also do run and have been for some time now, continued improvements in efficiency, automation, how to deliver sort of best in class in services that we also believe can improve margins further.
Yeah.
So that's another important part.
Okay. In Q1, as you showed us, the strong growth continued while the margin went down year over year, and you initiated kind of a cost reduction plan or strategy, but with no further details at that point in time. Is it anything else you can share with us now on where we will see that happening, to what extent, or what roles that will be affected? Anything else?
So we're in the middle of working it out, and we will present more in our second quarter report. That's when we aim to have the sort of plan finalized and starting to implementing it.
I see. And then the question on the consulting business, if we say kind of the pure professional services business, you have it related to the product reselling, obviously, but how do you find utilization today in your pure consulting business? What we hear from peers, etc., it's a little bit longer lead times to utilize consultants, especially junior ones, etc. Is it anything you see here during the spring?
In pockets, some pockets, we're starting to see it. So it's not big enough that it's impacting our numbers to an extent, but we're seeing. So we are, and in some pockets, as we're saying, we still have issues finding enough qualified people, and we have to rely on subcontractors, which is more expensive. But in some areas, and it's especially the more junior ones.
Yeah.
Yes.
I see. My final question is on M&A ahead. You mentioned you have done 1 to 2 acquisitions a year. The leverage is around 0.5 times, so that's fine as well. What are you looking to acquire?
So geographically, we want to find companies in the countries we're already in. We think in most countries our market share is pretty small, so there's a big opportunity to grow that and get good synergies out of that, top line and bottom line synergies. We want to buy companies that help us in our strategy. So services companies, managed cloud or consulting companies are on the top of our agenda. We want them to be profitable. We're not generally looking for restructuring candidates. And then very, very importantly, we want the culture to fit. I mean, we typically integrate the companies completely in a few years' time to get the best synergies out. And then it's really important that the culture fits. So we do quite a lot of due diligence and understanding the founders and how they've, or the owners, how they've run the company and what the culture is when we buy them.
Yeah. And can you find those targets within your targeted valuation ranges? And what is that typically you pay for a target?
So I think typically we've been historically paying around the 8 times the EBITDA or so. We get the question sometimes now if we see valuations coming down given the downturn in the market, and we're not really seeing that. We're seeing seller expectations roughly the same. So we're still maybe taking a little bit longer to agree on valuations, but we do think that there's still quite a lot of opportunities in this space. The only maybe we will have to buy smaller companies. I mean, we typically are looking for 200 to 300 million SEK revenue companies, but we've seen lately that we're also down to 100 million sometimes. Especially smaller consulting companies could be of interest in that range as well.
True. Thank you very much. That was the final question, and time is running out.
Thank you.
Hello, everyone, and welcome to this presentation with Xplora Technologies. My name is Øystein Lodgaard. I'm the analyst that covers Xplora here at ABG. With us today, we have the CEO and founder of the company, Sten Kirkbak. We have the COO, Kjetil Fennefoss, and the CFO, Jonas Ringstad. So with that, I leave the word over to you, Sten.
Thanks so much for the intro, Øystein. We are all really excited to be here today, and we will run a presentation which will be a recap from our recent Q1 presentation. If you go to the next page, you'll see, like Øystein mentioned, it's three from the Xplora team here today. Myself, Sten Kirkbak, CEO and founder, background from the tech industry over the last 2 decades. Also jointly with our COO, Kjetil Fennefoss, also extensive experience from the telco industry, more than 25 years. And also Jonas will take us through a financial update at the end of the presentation. On the next page, you can see a quick summary of Xplora. As you can see, Xplora has managed to become a category leader within our field, smartwatches for kids. It's a really large and untapped market that currently has a low penetration. And as we will showcase to you a little bit later, it's a very highly scalable business model with a lot of high margin recurring revenue services. Over the last few years, we have had a massive growth, currently being the largest one in the category, EU and US combined. We have sold more than 1.2 million smartwatches. And last year, we had a revenue of more than 500 million NOK. We are focusing on 9 core global markets where we have MVNO, meaning SIM connectivity. Kjetil will take you through some of those details. And we have currently managed to get more than 160,000 subscribers in our core market, first in Nordic and now ready to grow into the global market as well. Headquarter is in Oslo, roughly 120 employees. And some years ago, we got listed at Euronext Growth. Moving on to the next page. You can see a quick summary of the IP and our IP strategy. As you can see, really it starts with our core IP being the family IoT platform. Then we have now developed more than 10 generations of product smartwatches for kids. And as mentioned, we have also set up and invested in 9 global MVNO solutions, providing recurring or highly margin recurring revenue services. And also as one of the very few telcos or in our industry, we have been able to showcase that we can drive additional revenue from our value-added services as well. Moving on to the next page, we have a very clear way how to monetize our strategy as well. We have, as mentioned, developed 10 different generations of products this year and going into next year. We have 3 newly developed hardware platforms driving revenue from the watches from 149 euro. Then, as mentioned, since it's a mobile product, they all require a SIM. Hence, we are able to provide also the SIM connectivity in our product, in our 9 market. And we have 2 different price points, starting with our SIM basic proposition, roughly at 999, slightly different from market to market. And also we have the opportunity to upsell to premium SIM services for roughly 1299, so a 30% uplift in price for our premium services. That drives on average roughly 30 months, an average lifetime value over the lifetime of roughly 450 euro, with all revenue from services becoming very highly or a high margin from those revenue. Going into next page, we would like also to provide you a quick summary from our Q1. We recently, last week, presented our Q1 numbers, started with group revenue in Q1 of roughly 100 million NOK, uplift of roughly 36% year on year from last year. And of the 100 million, 49 million stem from recurring service revenue, which also is an uplift of 47% year on year. As mentioned, our subscription counts for roughly 170,000 subscription, a growth of 36% year-on-year. We have also managed to improve our gross earnings. Q1, that counted for 62 million NOK or 62% margin. We also, first time, we have reported a positive EBITDA in Q1, accounting for 1.6 million NOK, and we also entered or exited Q1 with a healthy cash balance of 55 million NOK. Moving on to the next page, that really summarizes why we believe the timing to look into Xplora right now is or should be very compelling. We entered into 2021, that was just after we got listed at Euronext, where we basically at that point was a hardware company, but with a strong vision to be able to sell services and execute a service strategy. Our lifetime value measured in gross margin was at that time about 25 euro. And at the time, we also traded at roughly 40 NOK per share. Now, 2 years later, we have been able to 10 times increase our gross margin measured in NOK to around 275. That is because we have been able to execute our service revenue strategy and selling our product bundled with basic SIM cards and also with the opportunity to upgrade to even more profitable premium services. And I think that's a good segue in order to allow Kjetil to guide us through how we have been able to execute our SIM strategy.
Right, so I'll give you an operational update with focusing on our SIM services. So if you go to the next, please, thank you. We used the years 2016 to 20 in the Nordics to build our MVNO setup. MVNO means that we are a mobile virtual network operator or one of the leading telcos networks. So we have the MVNO status. In that period, we actually managed to let's say, detect our segment as a new niche in the Nordic telecom markets, and we ended up taking 49% of the net adds during the period Q2 2017 through Q2 2022. And that's quite substantial number when you see this in a relatively big Nordic market. So 49% of the net adds, clearly defining a new niche and taking that niche. During last year, we set up the same setup in 4 new large European markets in Germany, in the UK, in France, and in Spain. And we also have an intermediate solution in the US, where we, while we are waiting for our own MVNO setup that we have just started now in Q2 this year, and we expect to be operational with a full MVNO setup in the US on AT&T's network during Q3 this year. We already have grasped 6,000 subscribers in the US on this intermediate solution, meaning that we are starting to build the customer base there as well. Next, please. We have been growing steadily over the last years in the Nordic markets, reaching a customer base of 150,000 subscriptions by the end of last quarter. And we also then said that we've got the first effects from the markets outside the Nordics, where we grew with 10,000 SIM subscribers outside of the Nordic markets. And in the US, we have a very high take-up rate on our SIM sales, meaning that 84% of the customers buying our Xplora SIM Watch with an included Xplora SIM card actually activated the SIM card. And of course, there is very big differences in the seasonality in our market, and that's the reason why you see that the Nordic markets, the black line, is flat in Q1, because there is also a churn on an existing base, while the sales are the lowest during Q1 in a full year. But overall, we have a growth then of roughly 10K in the first quarter. Next, please. We have introduced the Xplora Premium service on top of the telco service, and in that way, I would say we are one of the first players to actually monetize service revenue. That is something that telcos have been focusing on for many years, but it is very hard to prove it, and we have succeeded in doing so. So on top of the telco service, we have a set of entertainment content for children, such as games, learning software, adventures, auctions that they can participate in, and the parents then pay an equivalent to €3 for that additional service. We have been working a bit on how to sell it, and we have found out that so far the most efficient way is actually when the customer signs up for the service, that we give them the choice between the basic and the premium service. And we see 20% conversion rate, meaning parents then choosing the premium subscription at the point of time when they sign up for the service. On top of that, we sell also the premium service as a standalone to existing customers through the Xplora app. And as of May, we had then already 12,000 subscribers on the premium package. Next, please. Most telcos, they experience flat RPU development, RPU meaning average revenue per user per month. And we see here with an example from the Norwegian market on the left-hand side, that we gradually have increased the price over the last few years. And that is a combination of price increases, adding now recently sort of premium services, and just to show the impact of the price increase, which we did from the 1st of January this year, with equivalent to 8 kroner that would give us incremental 15 million NOK revenue for a full year, a full 12 months period. So I think that proves both that we are able to grow the customer base and we are growing the RPU, and on top of that, we add revenue from value-added content. Thank you.
Right. Next slide, please. So, as Sten mentioned, Q1 2023 saw a huge revenue increase, 36% year over year, up to 100 million NOK for the first time in Q1. Now, that's pretty good for a year, but looking at what we've done since 2021, it's almost a doubling of our revenue in that quarter. And as you can see, we have grown every quarter for the past 4 years. And this is in part, over to the next slide, please, due to a strong service revenue growth, as Kjetil mentioned. And something that Sten brought up as well was when we went public around the winter or sort of the fall of 2020, we had an equity value multiple on our annual recurring revenue of about 20. That has since come way down and is now closer to 1.6, which is pretty attractive for any investor, I would assume. So looking at our last 12 months service revenue, we can see that it has steadily increased. And on average, that has increased by 11% quarter over quarter for the past 8 quarters or so. Now, in 2023 Q1, we had service revenue of 49 million NOK. That was in large part from Norway, the biggest market by today. But also we see strong growth in Sweden, where 23% of our service revenue came from, and Finland and Denmark coming in at 12% and 7% respectively. Next slide, please. So all in all, our EBITDA was positive for the first time in Q1 at 1.6 million NOK, and we had annualized recurring revenue, meaning the service revenue we had for Q1 multiplied by 4 of 197 million NOK. Given the market capitalization we had of 280 million, That is 1.4 times our annual recurring revenue. We also had 42 million shares outstanding, and as I said, the share price was closer to 7 NOK at the end of the quarter. Next slide, please. So going a bit further into the cash balance, by the end of Q1, we had current assets of 280 million NOK. We had current debt of 154 million NOK, which gave us a net working capital of 126 million. One of the things that we had as a major achievement last year was 100 million NOK in financing facility from Nordea Bank. That gives us the opportunity to finance our purchase of goods for a total of 6 months at very attractive terms and conditions. So beginning at the end of last year and going into Q1 this year, we started using that facility. And that is one of the reasons you see that we have an increase in debt in Q1. Part of that increase in debt was from inventory. So we increased our inventory by 15 million NOK. We had deposits paid to our service providers and vendors of prepaid goods not received, which increased by 11 million NOK. And our accounts payables increased by 10 million, which was also a way of financing goods purchased from our vendors. We have also for the quarter a CapEx of 4 million NOK, which is in line with our guided 20 to 25 million forecast of CapEx for the entire year of 2023, which is significantly reduced from last year's CapEx. We also forecast improvements to our cash balance at the end of Q2 this year, and a positive cash flow from operations in the second half of this year. Next slide, please. Finally, we also want to quickly guide you through what the ownership structure looked like in Xplora today. So far, we have raised more than 540 million NOK in cash. We are listed on Euronext Growth in Oslo, and our top 20 shareholders currently control roughly 63% of shares outstanding. There are more than 1,300 shareholders at the end of the quarter. The final slide. I think we can now open to questions if there are any.
Yes, thank you very much. So I wanted to start up on touching on the market. We know it's right now it's a very tough market for consumer electronics and for wearables in particular. If you look at Garmin, wearable sales were down 14% year over year in Q1, but you actually managed to grow your device sales by 17 to 18% year over year in Q1. So can you say, is there some specific new markets or new customers driving this, or is this a general trend?
I can comment on that. We have entered into got some new customers in Germany, which is our largest market in terms of units sales. And also remember that we are in a new category where we are the leading player. So it can't actually be compared to, let's say, wearables in general. We are performing better than the market because we are, let's say, in a new category that continues to grow. That said, we get feedback from our retailers that we are performing better than the average vendors in the category. But it's mainly because we open up a new category of a product that hasn't been there before. So I think that helps us continue to grow.
Great. And today you have a very strong position in the Nordics. In Norway, 18% of all kids between the age 4 and 10 are using an Xplora watch, and now you're focusing on expanding also beyond the Nordics. Can you see what are the key markets where you expect to see growth in the years going forward?
We have a history of being strong in the German market, where we now have all the 3 leading telcos as our customers. So there we see a very good development. We see also a very strong development in Q1 on Amazon as a sales channel, where we can actually explore new markets and build the brand before we eventually enter into those markets with another MVNO, meaning telco and service setup. Of course, US, a lot of focus on the market where we have a strong team in place. Entering into US retailers takes time. We're working hard on it. We see the first results. We also announced in our Q1 presentation that we have the first major delivery to a US retailer shipped out. So it's going in the right direction. But these huge markets, it takes time to build the brand and get in a foot in the door with the major retailers.
Of course, that makes sense. And I guess you're also working with US telcos. Where are the processes there? Do you expect to be able to launch with a US telco this year, or is that something for the future?
I can address that, Kjetil. What we have said is that in all markets where we have seen success, a strong telco partnership has been part of that success in that market. For example, Deutsche Telekom in the German market, and we have been in multiple RFPs, and we still are with also the multiple telcos in the US market. And our objective is to also be able to have one strong telco partner in the US market, and we'll announce that as soon as we hopefully will achieve a partnership there as well.
Exciting. And moving over to the subscription side of the business, you now have shifted to a much larger focus on the subscriptions, going from 4 markets to 9 markets where you have a subscription in just a very short time. And then you also launched now your premium subscription. Can you say something about what has been the uptake of the new premium subscription so far?
Yeah, we have at the end of Q1, we announced 9,000 premium subscriptions, and we also showed it in this deck that we have 12,000 premium subscriptions at the end of May, or at the date of May when we present. So it's clearly going in the right direction. We see from the conversion when the consumers sign up for the subscription, roughly between 20 and 30%, depending on the market, they actually opt in for the premium subscription. And that's really without any hard sales or hard marketing. It's just giving the consumers the option to do a guided selection when they sign up. On top of that, we sell also through the app to existing customers or customers of telcos that don't sell with our subscription.
And the last question, which is a bigger question, where is Xplora in 5 years? Are you a provider of kids' smartphones with a larger share in more markets, or have you also expanded into other product areas?
I think that's a very good question, Øystein. And like you said, it's quite a big and broad question as well. What we have said to the market now is that for 2023, we have a crystal clear focus on replicating what we already have done with success. So extending the Nordic MVNO model into 5 new global markets. We are selling 3 products into 9 markets with SIM and true price point. However, as we also disclosed during our Capital Market Day earlier this year, we also was very clear that the kids wearable market is 1 out of 5, 6 very, very compelling and exciting family IoT markets. That means that we have 2 very exciting ways to grow from 2024 and forward. One, we can continue to expand our kids smartwatch category with SIM into new markets and new channels, or we can also capitalize on our strong position in the broader family IoT space, meaning that we could explore new categories such as elderly or even pets, bikes, and so on, other categories within family IoT. That's because it's the same distributor, it's the same retailer, it's the same buyer. So it's a very nice way for us to grow our technology into multiple verticals. So we can expand into new markets or we can expand into new verticals as long as we successfully grow our model this year.
I see. Well, I think it will be an exciting journey to follow. Thank you very much for presenting to us here today, and thank you to everyone who listened in. Have a good day.
Thank you so much. Bye.
Hi everyone, and welcome back to ABG's Investors Day. My name is Alexander Wadman, and I'm an analyst here at ABG. With us today, we have the CFO of Petroleum Oko, Erik von Krogh. He will present the company, and I will follow up with a couple of questions. With that being said, please go ahead, Erik.
Thank you, Alexander. So my name is Erik von Krogh, and I'm the CFO of Petroleum Oko. And I'll give you a brief introduction to our company, where we are and where we're heading. So Petroleum Oko is an exploration and production company based in Bergen, Norway. We were founded in 2011 by Petroleum SE, which is a company listed on the Norwegian Stock Exchange, and is still our largest owner, controlling around 49%. Since the beginning in 2011, we have been involved in 3 operatorships. We have been partner in 10 exploration wells. We are currently an active partner in 13 licenses on the Norwegian continental shelf. So our main assets is the 20% interest in the Dugong discovery. In addition to that, we have 2 prospects with both with a chance of commercial success above 60%, the Løvmeis and the Bounty prospect. So as you can see on the figure at the bottom, the current production is limited, but we will have significant production from 2025 and onwards. So next slide, please. This slide gives you an overview of all our assets. If you can see to the map at the right, we have the current production from the Enok and Flinder field in the southern part of the North Sea, currently producing around 40 barrels per day combined. The main part of our portfolio is located in the Tampen area in the North Sea, including the Dugong discovery. And then we have the 2 prospects, Bounty and Løvmeis, in the Norwegian Sea. So the figure here at the bottom, as you can see, the activity in 2023 has been limited. Going into 2024, we plan to drill at least the Løvmeis well that is firm, but most likely also the Bounty well and perhaps one other. Next slide, please. This slide shows Petroleum Oko's value creation strategy. And it is 3 phases, starting with the exploration and discovery phase, moving on to the development phase, and then the production phase. In the exploration and discovery phase, we are awarded licenses from the Norwegian government. And this is the phase that we have been in so far. However, with the Dugong discovery and the 2 other prospects, we are in the process of moving into the development phase and going into the production phase. And earlier, this was very difficult for companies of our size because there is a lot of capex. However, a new petroleum tax law that was implemented in 2022 now gives us a tax refund for all the investments related to development, meaning that we get a refund of 71.8% of everything we invest in the field development. So that makes it much easier for us to go into this phase and to keep ownership than it has been earlier. Next slide, please. I'll now give you a little bit more information about our main assets. So you can just move to the next slide. The Dugong discovery was drilled in 2020. We have a 20% interest, and the estimated recoverable resources is 56 million barrels of oil equivalents. The estimated internal rate of return is around 80%, and the first oil is expected in 2027. So this gives us a production of around 8,500 barrels per day when it starts. And this the Gong is in the region around the Snorre field, so it will be connected to Snorre and produced from there. So yeah, next, please. The Løvmes prospect. Løvmes was actually developed by Petroleum, as we were the original operator of this field. However, we decided to hand over the operatorship to Equinor, and that was a strategic move because Equinor owns most of or all the infrastructure in the region. So this prospect has 12 million barrels of oil equivalents recoverable resources, which is not very much, but since it is being drilled through existing infrastructure and connected to Norne, it is possible to develop the field at a very low cost. And it has a very high internal rate of return of about 177%. So the pilot well is expected to be drilled in the second half of 2024, and production is expected to start in second half 2025. And as I mentioned earlier, this has a very high likely very high chance of success of about almost 70%. And that is based on that we have very good seismic data and very clear indications of hydrocarbons. So we are quite sure that there will be oil in this license, but the question is how much. Next slide, please. The Bounty prospect was drilled in 2022, and it was a dry well with indications of hydrocarbons. However, after test production and further analysis of the field, the group of partners, which by the way is a very strong group, has decided or that they or is of the opinion that there still is a lot of potential in this field, and it is therefore very likely that there will be a new drilling of a new well next year. So the estimated recoverable resources is 175 million barrels. We have some indications that it might be significantly higher than that. The estimated internal rate of return is 32%, and the first oil is expected in 2031. So this is one project that we are really excited about and are looking forward to see what happens with the drilling potentially next year. Next slide, please. And yeah, a little bit on the finance and the share. Petroleum Oko is currently traded at Euronext and OTC, which is a trading place for unlisted shares. We have the ticker PNO. As of today, we have 675 shareholders. And we aim to list at Euronext Growth Oslo in 2024. So the figure to the right shows the 10 largest shareholders as of today. And as mentioned, Petrolia SC and its subsidiary Petrolia AS is the main shareholder. A little bit on the capital structure. In total, it has been injected equity of 510 million into the company since it was founded. And in addition, there are loans from shareholders of 81 million. And we also have 67.5 million in external loans. And that is a facility that is secured by the tax refund. And so we are building up the loan facility as we increase the tax refund. That's a very good way to fund the future developments. Next slide, please. And finally, summary of what I've been going through. So we consider our assets to have very high value potential. We have a portfolio with several low-risk, high-return assets, the mentioned Dugong, Løvmeis, and Bounty. It is short time to production on both Løvmeis and Dugong that will take the company to a different level than it is today and give us significant revenues. Our projects have a high internal rate of return on the investment. And we plan a listing on Euronext Growth, hopefully next year. Also, the underlying market is currently strong. And we believe that the listing will have a significant impact on the pricing and also the future events like the drilling of Løvmeis next year and also the drilling of Bounty. For Norwegian investors, it is also relevant that the company has a negative tax value, and that means that you will not have a wealth tax on your investments. And finally, we have favorable funding terms for the tax refund, as we have 71.8% of all our OPEX and CAPEX refunded by the Norwegian tax authorities. So that was all from me. So thank you very much.
Eric, and I have a couple of questions. Could you share your thoughts on how the company evaluates the opportunity to remain a license owner all the way through the development stage and up until the production stage compared to divesting and monetizing on discoveries before the development phase begins?
Yeah. As I mentioned, the new tax law that was implemented in Norway in 2022, that will, of course, make it very much easier for us to keep the ownership through the development phase and going into the production phase. as we will be able to finance on the tax refund, and that we of course will have 71.8% refunded the next year. So of course it will depend on project to project, and yeah, depending on size, risk, all of that will be taken into consideration. But for instance, for a project such as Løvmeis and also Dugong, we consider it to be manageable to keep our ownership without doing any farm downs or sell. Yeah.
Yeah. Okay. Thank you. And I know you touched upon this earlier, but the Dugong discovery is one of your most important assets. And how do you see Petrolia maximizing the value from these assets? Is it to remain as an owner until the production starts, or is it to divest the discovery?
Well, our main target is to remain an owner until production. That being said, we are continuously evaluating opportunities in the market. So if the right opportunity is there, we will consider to either sell it or potentially swap it for production, for an ownership in a producing license. So yeah, those are the things we are looking into.
Absolutely, thank you. And one of the most promising upcoming events for you guys is the Løvmeis exploration well, set to be drilled in Q3 24. Could you explain why this well has such a promising potential and how it could allow for a fast-track field development into production if it's successful?
Yeah. Yeah, as mentioned, we have an estimated chance of success of 67%. And that is based on the seismic data that we have that indicates that we don't have any other explanation to the data than that this is oil in the field. So the question is, how much is it? Will it be enough for the license to be commercially successful? But we are very we have high expectations to this license, and also it is the fast track solution is that we have is that we can do the drilling from an existing template, and that saves us time. So we will drill the pilot well already in the second half next year. And then if this is successful, we will be able to produce and install a producer the next year, and it will be tied back to the Norne installation. So since all the infrastructure is there, the cost is low, and it is possible to get production in a very short time. Normally, it will take probably 4 to 5 years from your drill until you have production. Here, we will do it in 1 year. So, yeah.
Yeah, thank you. And I believe this will wrap up the Q&A. Thank you, Eric, for the presentation as well as the Q&A, and thanks everyone for listening. Thank you.
Thank you very much.
Hi everyone, and welcome to ABG Investor Days. My name is Nikola Kalanowski, and I'm an equity research analyst here at ABG. With us today we have Christer Magnusson, CEO of Nilörngruppen. The idea is that he will present Nilörngruppen to us for about 20 minutes, and then we will have an opportunity for a Q&A for about 5 minutes. And with that said, Christer, the floor is yours.
Thank you very much, Niklas. I will, as said, make a short presentation of Nilörn. Hopefully after this presentation you will have an understanding of the journey, where we are coming from, where we are heading towards, the change of the business and the challenges and the opportunities we are having. Next. Our vision is to be the best label and branding company worldwide. It sounds very ambitious, and it depends what you put with the meaning by the best label and branding company worldwide. We're not necessarily the biggest, but we should be innovative, we should be transparent towards the client, we should be creative, finding creative solutions, we should be fast. We also proven to be successful in this business. You need to be fast, deliver fast samples and so on. And we should be a reliable partner towards our client. And they should know what they get when they are doing business with Nilörn. Our slogan is adding value to your brand. It's an old slogan we have had, but that summarizes very much what we are doing. We are helping our client and the brands to add value. So I think that's pretty much everything that we do. We're adding value to our client brands through the labels, through etiquettes, and through packaging, etc. Next. Little bit Nilörn. We had the headquarters here in Sweden, and on the picture to the right, you can see the manor house. We're sitting here in Borås. Borås is the textile mecca of Sweden. Still, it was in the 70s, a lot of production here in Borås. And the Nilörn was founded in 1977 as a design bureau by two gentlemen, Nilsson and Nilörn. Since then, we went to the stock market in 1997, and with this money, they acquired a lot of production around in Europe, Germany, Belgium, Denmark, Sweden, UK, Portugal. And then the competition became too tough, so we closed a lot of production, most of the production here in Europe. So they are our sales units today, and we open up new operations around in Asia, where that is our sourcing and distribution unit. So we have clients, brand owners around in Europe, but most of the invoicing and delivering and sourcing happens in Asia. We still have one production in Europe, that is in Portugal. The intention was to close it sometime years ago, but it was too expensive. But it was like 15 years ago. And luckily that, but because what we see now is more and more volumes moving back to Europe. So that is one of our success stories at the moment. We are almost 600 employees, whereof only 44 in Sweden. So we are not a huge company, but we are very international with production and sourcing around in the world. The headquarters in Sweden consists of the central IT, central retail information services, which is working with IT together with the customers. We have a central design studio, and we have finance as well, and the sales office. We are one of the leading branding and design companies in Europe, with a 90 million euro turnover in 2022. We were listed in 1997, we were delisted in 2009, and we went back to the stock market again 2015. Next. This is a little bit about the journey. If you look into the left, you see no profitability. That what I used to call phase one. When we were we had a lot of production, and we closed a lot of production. We were loss-making for some years, and we changed the whole business idea. And then you can see from 2009 and onwards, there was an upgoing trend, both in the blue staples here, that is the sales, and also the gray line, that is the operating margin. There was a really turnaround case in that case. So what happens then, we decentralized and focusing very much on sales.
with the sourcing offices around in Asia and the sales offices now focusing only on sales. And we built up incentive models with our sales organizations and very decentralized. What happens then in 2019-20? There was in 19 there was a tough situation in the UK, leaving euro, and then we also had in 2020 the pandemic, and that was pretty much the start of the big journey we're doing at the moment, where we're changing from being extremely decentralized, centralizing centralizing again to some extent, driven by the client. It's client driven. There's so much sustainability, CSR driven at the moment. So that is our sales, core sales, to be really good in sustainability, but also technical driven. And so we need to be more homogeneous within the group to get out the synergies. Being so decentralized, we ended up like 350 different external suppliers. We need to consolidate that base, and to be able to do that, we need to do that more centralized. And as you can see, after the pandemic, the trend has been our friend. Sales increased, and so has the margin. Coming back to that a little bit later on as well. Next. Here you can see where, as that I mentioned, we are with the sales operations around in Europe. We have a production, as I mentioned, in Portugal, and all around here in Asia, where we have sourcing and distribution units. We have a full factory in Bangladesh as well, and we have a small production in Hong Kong and in Turkey as well. So we're building up network both through external suppliers but also internal suppliers. The goal is not to be a big production unit with own production, but to be more flexible using external suppliers as well. So there will be a combination. The reason for being a big factory in Bangladesh is due to local legislation that is, if we should do local trading in Bangladesh, we will be hit by local custom duties and so on. And Bangladesh has also proven to be a real success factor for Nilörn. We have two very, very tiny operations in US, one person in the East Coast and one in the West Coast. But it's thought to grow there, especially on the East Coast. So we will see how that goes. We just made a decision to start in Vietnam. So that is currently going on at the moment. We are supplying Vietnam today from Hong Kong. Next. Very short brief about our competitors. We have big competitors like Avery Dennison with a turnover of $8 billion, and we have Trimco. Trimco made a few acquisitions, whereof they acquired Atex. Atex was a Danish company, Danish group, very similar to Nilörn, very lookalike Nilörn, where we were in the same country, same size, etc. They have now been acquired by an American company lately. Yeah, I will not go through all these in details, but Ruderman Haak is a Swedish competitor, approximately half size as Nilörn, they're not listed, and there are Avery listed, and yeah, so not so many companies are listed. Many of these are private owned. There is a lot of going on in the market at the moment, many acquisitions, and also many inquiries about companies going on. Next. And just to show you here what we're working on at the moment over the last years is very much structural, centralizing sourcing, focusing very much on CSR sustainability. Compliance is something that we employed. We are supporting our client in compliance. It is so much regulations about material and what you can write on the packaging and the labels and so on. So we need to be here and support our client. We also here with material to support our clients and guide them. We have made a material guide to get them what they are, support them in choosing the right sustainable material. And then system-wise is very much building up supporting system on this, and also towards our client. I'm coming back to that as well later on here. But for all this, we built up the organization and done investment in this to be in the forefront. There's no way out. I think either you will be in the front or you will be ahead of the competitors. The competitor will be ahead of you, sorry. But we decided to be in the forefront here. Next. And then you can see here on the right, this is what we call Nilörn 3.0. 1.0 was when we had production, 2.0 was when we were with a lot of sales, decentralized, and now 3.0, where we want to be innovative, transparent, creative, fast, modern, and reliable. Next, our sustainable journey. This is one of our Nilörn's unique selling points. I think we are among the best in the industry on this, supporting our client, and this is a very tough area, especially for most. And then I think that is also the reason why we see so many smaller competitors for sales, because it's so tough to be on top of all these areas. You need to have muscles to be able to do this. We started with this already in 2004, where we made our first code of conduct. In 2017, we employed our first sustainability manager of the group. She's really skillful. And now she has a team with the CSR people, both in Asia and in Europe, and where we work on very systematically towards our client, provide them with information and material, and really guide them through this area. Next. Short about the product. This is a product you used to see with Nilörn. This is the labels, all sorts of different labels, woven, textile, hang tag. So this is the traditional Nilörn, what we're coming from. Next. We also focusing more and more, and we set up a division within Nilörn focusing on the product. It's not just standardized product, it's more gift product, gift packaging and so on, more nice. And also we're talking very much about recycled polybags. That is also one niche that we've been quite strong in. So packaging is some area that will grow and continue. Next. RFID started. We were very early adapters with this, like 15 years ago when I joined Nilörn, that we had that in our showroom. It was too early, it was costing too much money, but now this is coming more and more from the client demand. This is more a logistics solution. They will know for sure exactly how much they have on the stock of different garments. Every garment will have a unique identity, and they can be scanned very easily through these by hand scanner, so they know exactly how much they have of each and every garment, which is very useful, especially in when you're selling e-commerce business, because if you're out of stock and you think you still have stock, then it will be complicated. Not as much complicated if you have a physical store, because if it's out of stock, then you don't have any product to show. So so this is very good for, especially for the e-commerce business. Next. Another area, as I mentioned, we're becoming more and more technical, and we need to invest in this area. Is RFID, but also Nilörn Connect. Nilörn Connect is where our client or end user and consumer have a QR code or NFC chip on the garment, where you can provide information where it's produced, sustainability information, and how to wash, care instruction, etc. So this is what we are building up. We're building up information that we provide our client, so they can see also statistic behind this, and they can change this information that you as the end consumer. So this is an area that we are spending much resources in at the moment. Next. We have 3 core values in the group. Innovation. We want to be innovative. We need to find the creative solutions. We need to be respected. As you know, we are in many countries in different areas, so we need to respect for each other and also for different culture, different religions and so on. So that is crucial both internally but also externally. And take responsibility. We want all the employees to take responsibility to their taking and making a mistake, but also take responsibility to make the change within the group. Next. These are the financial targets. They have been there for quite some time. You've probably seen them in the past. We should receive a growth over the 7% and operating margin of 10%. And we have had that, as you know, for quite many years. Next. Just to show you here a bit about the Q1, Q2, Q3, and Q4. This is the sales, and as you can see, Q1 sales last year was very strong, a little bit slower this year. What was good this year, we started up in January very, very slow. February was a little bit better, and March was better than February. And so we will see how it goes in the Q2. But you can see also in the Q2 we have extremely high comparison numbers, the really strong Q2 last year. But also then if you're looking at Q3 and Q4, they are not that the comparison number is not that intense. Next. And that is the same with the profitability, as you can see, they follow the same as the sales. Next. Yeah. Just a summary of what we presented here for Q1, order income minus 21%. We had still quite some stock level. And the way we measure stock is that when we're placing a purchase order, then we have stock. So assume no order income at all, we will deliver out all the stock because, so we are working quite hard on the balance sheet at the moment, try to reduce the stock level. Sales was minus 9%, minus 13% adjusted for the currency. Operating profit of 17 and 40 last year. We made an acquisition at the year-end, Bally Labels in Switzerland, which made a small contribution. We have had a positive development in the luxury segment, and I think this is really great to see when the big markets like in UK, Sweden, and Germany have a weaker, and what we feel here, what has been weak in these markets is especially the outdoor. They are the one that is suffering in the Q1 here. Built up too much of stock level. They are really good brands. We are not afraid of them, but they had a fantastic development during the pandemic, and then they cut down the stock, ending up in too much stock. So that is what we're suffering from at the moment. But then we have a positive development in Italy and France. Still our production units in Bangladesh and Portugal continue as well. And we decided to establish in Vietnam. Next. Yeah, I talked about what we are building at the moment here with all this area. So next. Yeah, that is pretty much that. We've seen where we were coming from here, starting already from the beginning of year 2000 with all the production, closing the production, ending up with a very, very decentralized sales organization. Now try to get out the more and more synergies. We see also the trend in the market where it's much technical driven and also sustainability driven and also of design, of course. But maybe less about the product, more about the service level around. So that is what we are facing and building up the organization. So we are in a shift, you would say, and there is a lot of going on in the market. But I think it's exciting, and I'm sure we will get there through all these areas where we are putting investment in. Thank you. So if any questions, please, you're welcome.
Presentation, Christer. A few questions from my end. Could you perhaps describe the business momentum right now? Do you think that things are getting better compared to Q4 2022? Is there any feeling that you'd like to share with us?
No, not the Nilörn number, but I can share. I mean, the general in the market. I think still some companies have too much of stock, but I also see that. Especially in the outdoor, I think that's still the case, but we also see that in other areas that it's starting to take off, and I think it's underlying optimism towards the autumn side.
Yeah, you mentioned that you're looking to invest, at least in your quarterly reports, that you're aiming to invest in Bangladesh and still in Portugal. Approximately when can we expect these investments, and is there perhaps a figure that you could share with us if you would like?
In both in Portugal and in Bangladesh, we are looking for buying land. In Portugal, we know what land to buy. We also know what price and so on. So what we're doing there in Portugal at the moment is that we're investigating for toxics and so on in the ground, and to make sure that we can buy that without any problem. So, but I assume, even though we buy the land this year, the building will not start until 2024. And the same also in Bangladesh. We identified some land. We have not made the final purchase there, but that will also take quite some time. Investment-wise, we have not said, but the investment will be less big in Portugal because that's an extension of the existing factory. In Bangladesh, it will be bigger because there will be a complete new greenfield project.
Yeah, and could you perhaps share with us the rationale for investing in Bangladesh and Portugal in this case?
I think in Bangladesh, the rationale behind that is that to be there, we started off as a trading company. The rules has changed in Bangladesh, so for us to be able to be competitive in Bangladesh, if we should import to Bangladesh, we get hit by like 100% custom duties, and if we're doing local sourcing and selling Bangladesh, we cannot push the VAT, so we have to take the cost for the VAT locally in Bangladesh in our own books. Yeah. Completely. So, and also we've seen the CSR and also getting the good quality in Bangladesh has been an issue. So therefore we started up with our own production, and that has proven to be really, really successful. And the reason why we want to move this now is we are completely full. We are more than full. We cannot expand the factory, but we have the demand. So, and then my thinking was that we set up another factory. We had run 2 factories, but the legislation in Bangladesh and so on is that if that is the case, then we need to run with 2 companies and so on. So we said that we better move the whole factory and start from there. And where we own today, we don't own the land today. So we said that to be long-sighted in Bangladesh, we try to find our own land and build on that instead of renting.
Yeah, absolutely. It's a good problem to have. Demand. That's a good thing to have.
Yeah,
in general.
it's a good problem. Yeah. And also the same. Also in Portugal, I think the factory is more than full at the moment. We are outsourcing. We have 2 external warehouses, so it's not efficient. So we try to make it more efficient.
Yeah. You mentioned that you've expanded into the luxury segment, at least in Italy and France. Could you share with us at least how do you think it is going for the clients? Do you think they're doing well? And is this a segment where you could see that you can potentially expand a little bit more into?
Yeah, absolutely. And I think this is an area. Looking at the luxury segment, they are a little bit different compared to other segments. They are very keen about the quality, and they're very keen, and they're doing very, very careful research before you can be a supplier. They visit the factories and they're doing due diligence and so on. But I think once you get in there and once you manage to give them a good service, you are in. And we managed here to take a few good brands on board, and now we really need to work hard on providing them a good service to prove to them that we are reliable suppliers. And like in Italy, these luxury brands, they want European supply. They don't want Asian supply. They are very keen. We want European supply. That's why we can have our own factories, but we also need other supplying partners in Europe to.
Absolutely. Well, I'm afraid that we're out of time now, Christer, but thank you very much for presenting and for answering some questions. And thank you to everybody else for listening.
Fine. Thank you. Thanks.
Welcome back, everyone, to ABG Investor Days. My name is Henrik Hintze, and I'm an equity research analyst here at ABG. With me now, I have the chairman and CEO of Briox. Please, go ahead.
Many thanks, Henrik. We are very happy to participate at ABG's Investor Days, and we appreciate the opportunity to present Briox. As Henrik just mentioned, the ones that will present today are myself, Johan Nordqvist, who is the CEO of Briox, and also Erik Hammarberg, who is our chairman. So next slide, please. So when it comes to the outline for today's presentation, I will start by giving you a brief introduction to Briox. This will include an introduction to our business model, a little bit about the markets where we sell our product, and we'll also look at our current ARR development. Erik will then go into a bit deeper into the market opportunity and the really attractive business case we as a company are going after. And then I will try to link this market opportunity to our strategic priorities and talk a little bit about what you can expect from Briox going forward when it comes to operational focus. And then finally, Erik and I are very happy to answer any questions you have. So next slide, please. So let me start by giving you a brief introduction to Briox. We continue. I assume that most of the listeners today probably know Briox quite well, but for those of you who are new to the company, I can say that we are a SaaS company that helps the smallest businesses to digitalize and manage their business administration. We are a listed company, and you can trade Briox at Nordic Growth Market. And the product we provide is a cloud-based, user-friendly platform and mobile app, which enables small business entrepreneurs to work together with their accounting agency consultant in a smart and efficient way. And the solution is delivered as a subscription service to customers in Finland and in the Baltics. And product development and marketing is managed from our head office in Växjö in southern Sweden. And to reach these business entrepreneurs, we work with a partner strategy. And in practice, this means that we predominantly sell our solution to accounting agencies, who in turn then recommend Briox to their customers. And we currently work with more than 200 agency partners across this region. And in our joint sort of business development efforts, we have a distinct focus together with the agencies on the micro business segment, which Erik will talk a little bit more about in a second. So we can continue. And it is our very strong belief at Briox that the micro business entrepreneur should focus primarily on managing the flows and activities connected to the money going in and out of the company. And this includes sending invoices, handling payments, managing the dialogue with customers, of course, where in turn the agency consultants, on the other hand, must be given the best possible conditions to manage the accounting and provide expertise. So we believe that the agency consultant should not have to spend her time on and energy managing the micro business entrepreneurs administration. So this sort of approach sets the stage for Briox's solution and product development, meaning that we try to make it possible for both these parties to focus on what they do best. Next slide, please. And as a company, we have very aggressive growth ambitions. And as most SaaS companies, our key metric to monitor this development is annual recurring revenue, ARR. And I would say that driving top-line growth is a clear priority for us at this stage in order to scale our business and to secure healthy long-term profitability. And when it comes to ARR, we've been growing steadily during 9 consecutive quarters now. And in Q1 2023, the growth rate was 52% compared to same period last year. And I would say an important contributor to this accelerated growth is that we have become, as a company, increasingly successful in signing contractual agreements with our agency partners, where they commit to managing a set number of customers in Briox. And I will talk a little bit more about this later. Please continue. And with that introduction to Briox, I'd like to hand over to Erik, who will go a little bit deeper into the big market opportunity that we're seeing in this micro business segment. Please,
Great.
Erik.
Yeah, thank you, Johan. And hello to everyone listening in today. As Johan said, the chairman of the board at Briox, and I've been so for exactly a year, actually. So I was participating in the last ABG here session last year. And really what attracted me to accept this offer was a great excitement and equally a deep conviction of the market opportunity that lies ahead of Briox as a company. So happy to share some of my perspectives and thoughts about this for the next few minutes. So we can take the next slide, please. And as Johan laid out in the introduction here of this presentation, Briox really focuses on the micro business segment. And the hugely positive thing about this focus is that virtually all companies in Europe are micro businesses from a numbers perspective. 93 of all companies in Europe have fewer than 10 employees. And this is, of course, a mixed bag of freelancers, growing companies with great ambitions, maybe lifestyle businesses, or just simply entrepreneurs who prefers to work for themselves rather than for a big corporate. So it's a mixed bag. But regardless of these different motivations why they're running their companies, chances are pretty good that Briox could actually be one of their first investment in a technology to support their business plan. So the market is huge. So we can go to the next slide, please. And the thing is that a micro business is just like any other business, really. It's just smaller. And that means that the needs and the business process are just the same as a big company. You have to get customers and drive sales, of course. You have to take care of these customers that you bring in. You need to make sure that you control your costs to be profitable and make an earning. And if you do have employees, at some point you better make sure to keep them happy, unless you will lose them. And in particular important for a micro business is you need to manage your cash flow. So make sure that you get more cash in than you produce cash out from the business at all times. But in summary, I mean, the needs and business process are essentially the same as for a big company, but the big difference is that they're often managed by one or maybe just a few individuals compared to the big organization that has whole teams to manage all of this. Next slide, please. So given the sheer size of the segment, 93% of all businesses in Europe, it's a little bit surprising to see how few existing SaaS and software companies that are actually supporting this community in a meaningful way. The background for most existing players and the incumbents is that they put their focus on maybe SMB, so some small companies but larger, mid-market, or the enterprise segment. And as a result, these solutions are very seldom a really good fit for the micro businesses. And why? They are often quite complex and expensive to implement. And also they have quite little interest in you as an entrepreneur because there's not so much you can afford. It needs to be an affordable price that you can pay for this. So you're not really that interesting to them either. Secondly, even if you do have the money, it's hard often to justify the business case because you're really not getting that true level of automation, which makes your life easier to reduce your cost or actually make your overall core business more successful. It's often hard to justify the business case because of the lack of automation. And thirdly, most often they are super boring and built for experts. And entrepreneurs are often generalists, good at something, but maybe not at administration, financials, and all of those things. So they are hard to deal with from a non-expert point of view. So these are some of the explanations why these solutions are not a good fit for our audience. So if you go to the next slide, please. And this is a bit worrisome, actually. A recent OECD study showed that the gap is actually increasing between small and big companies as it relates to digital transformation. And especially in this time, virtually every large corporation have quite strategic discussions on how they can use things like AI, analytics, big data to become more efficient, productive, or cut cost, or be more competitive overall. The other day, we saw British Telecom announce that they're cutting 55,000 employees worldwide. Many of these roles and positions will actually be replaced by AI technology. And as this continues, these kind of investments from big corporations, there's an obvious risk that micro businesses gradually fall behind in this development, and over time will have a difficult time staying competitive to these larger companies and actually grow based on this. But if we go to the next slide, please. So we have for Brex a quite clear belief that the broader society actually gets quite a lot better by having new companies started and having those dreams fulfilled. That's the way to develop society broadly. And we want to make our small part in this and closing this gap. And there are a few things that we think are critical to help closing this gap and providing these kind of opportunities also to the community of micro businesses. The first is that UX, the user experience, that is, have to be best in class. So not because it's beautiful to look at or looks fancy or anything like that, but it's more like you need to know exactly what to do and how to do it. There couldn't be any time for training and learning something, because that's a luxury that the micro entrepreneur wouldn't have to learn a system. And secondly, the underlying technology needs to embed the latest AI technology, which means that you actually can delegate work, get a little digital coworker in your pocket or on the desktop to help you run your business. And thirdly, you need to truly help the entrepreneur in helping them with their business flows that are most critical in this phase of running a company. And that is most often keeping track of your customers, making sure that no bills or invoices are missed, that you have to pay their suppliers and partners in time, and overall managing your cash flow. Those are the critical business flows that you really need to care for as an entrepreneur, and that's where we put our focus as a company. If we jump to the next one, please. Before I hand over to you again to talk about some of our strategic priorities lying ahead, I just wanted to take the chance of introducing my crew here, my dear board members. I will not go into the resume of every individual in this group, but just happy to say that we do have a very, very strong team in place. There's a great diversity of experience across disciplines like operations, strategy, communications, different investments, which is a great asset for Johan and the team in guiding him, and as the company and the team deliver on their plan going forward. Now over to you, Johan, again to talk about the strategic priorities and what's up next.
All right, let's move on. Thank you very much, Eric, and I hope at least our excitement about this market opportunity and the playing field we're in shines through. So what can you expect from Brex going forward, and how does this link to the business opportunities that Eric has talked about? So if you continue, I'd like to point out 3 sort of strategic priorities, and I would say the most important priority is to strengthen Brex's position as the leading solution in the micro business segment. So to our agency partners, our customer promise is to offer the most efficient solution for handling micro business clients. And in practice, this means providing functionality that enables radical time saving for the agency consultants managing micro business clients. Because we think that by getting more done in less time, the agency can actually say yes to more clients, and thereby enabling a more profitable working model in this segment, which is oftentimes actually a struggle since the willingness to pay is not huge. So it's all about efficiency and managing more with the same resources. So we will therefore continue to launch more time-saving initiatives, all aimed at strengthening Brios's position in the market. And in parallel with that, and we're quite excited about this, we will gradually focus more and more on developing the part of our product offer that is aimed directly at the micro business entrepreneur, linking to what Eric just talked about. And here our ambition is to take a leading role in enabling what we refer to as business simplification for micro entrepreneurs. And above all, this means being able to offer a brutally user-friendly solution for mobile phones. And what this means in practice in terms of functionality, I'll be able to come back to you later in the year, but I can tell you so much that we have very exciting plans in the works that we will talk more about soon. So if we continue, please. Another very important priority for us is to grow our business with our existing agency partners. As I mentioned in the beginning, we have a network already of more than 200 agency partners. We should, of course, leverage that. And as I mentioned earlier, our sales organization is increasingly successful in signing agreements with agencies that include a contractual commitment to handle a larger percentage of their customers in Brios's platform. And to get even better at this, we will continue investing in our onboarding and partner support model, because through a more systematic process to easily get started with new customers in Brios, it's possible to speed up user growth and thereby increase sales. So this is, of course, very important for us. And finally, move on. We will strengthen and adapt the organization continuously. As I mentioned, we will have a greater focus on developing the part of our solution that is aimed directly at the micro entrepreneur. And with that, it becomes sort of important to ensure the right competence within all parts of the organization. And such adaptation includes, among other things, then, of course, reinforcements in product design, more focus on content marketing, and even more focus on digital sales. And in parallel with this, we will continue to invest in our partner business, which is business critical for us and where we're having very good leverage at the moment. And just as an example, as a part of this work, we very recently recruited Truls Dahlén as Brios's Chief Revenue Officer. And Truls comes most recently from Medius, which is one of the largest SaaS companies within the B2B space in the Nordics, where he was previously Vice President of Sales and responsible for sales to accounting firms. So I'm mentioning this as an example just as a testimony of us being able to attract really strong talent who want to be part of this exciting journey. So that sums up sort of the essence. If you move on to what we have in the works, the business opportunity that we see and the operational focus that I try to have together with the board and the lead team. And on that note, Eric and I would like to thank you for listening. We hope that we have triggered an increased interest to follow Brios. We are, as I mentioned, Eric and I, very excited about this business opportunity we're going after. And we hope that several of you will join us on this journey ahead. So with that, we're very happy to open up for any questions that you may have.
Thank you very much for that. Let's go ahead with some questions then. Could you elaborate a bit on the development you see in the underlying market right now and how that affects your business?
I can try to comment on that. I assume you're relating a little bit to sort of the macroeconomics and inflation and all of this. Am I right?
Yeah, sure.
Yeah. It's a very good question. It's, of course, something that sort of affects us and everybody else. But having said that, I would say that we haven't seen much that has affected our business negatively yet. Of course, we have to follow what happens in these, in the segments that we target. Of course, these micro business entrepreneurs, they also have, especially in some segments, they are dependent on their customers or their business doing well. And of course, in some segments, they're more vulnerable than others. But having said that, I think we're somewhat fortunate in operating in the space that where we actually provide a solution that can enable you to run your business more effectively, efficiently. So it's probably not the first investment that you let go of. And also, I think our subscription model is, it's not attached to a huge cost. So we haven't seen so much yet. But having said that, we of course have to take measures such as being very mindful about pricing, looking after cost, and ensuring that we put increased focus on delivering value. So I think it comes back to what we talked about, having a brutal focus on user experience and making sure that we are frankly relevant to both our partners and to our end users.
Thank you. The growth in the number of bureau partners you have has slowed a bit recently. Is this connected to some strategic change in how you acquire customers? Are you targeting end customers more directly, or could you give a bit of a comment on that?
Right. No, I think it's historically a measure that we've been very focused on since, as long as we have a partner strategy, of course, there should be a link between the number of partners and the business you can grow. However, we have, put more focus, I think, lately on ensuring that we work with the right partners. And we put more effort now into actually growing our market share with the agency partners that we have. So it's right that you say that if you look at the growth rate in terms of sheer numbers of partners, it's slowed down a bit. But if you look at the ARR growth, it's actually going in the other way. So we're quite confident that striking a good balance between quality and quantity is the right thing to do. But having said that, we of course aim both at expanding over time the number of partners that we work with. But again, it needs to be the right partners that share the ambition to grow in the micro business segment together with us.
All right. Could you give any comment on what kind of scale your business needs to reach to achieve a satisfying level of profitability?
You want to comment on that, Eric, from a longer term perspective?
Sure. So we're not commenting obviously explicitly on forecast or giving any type of predictions. The company needs to grow into a slightly higher revenue mass in order to have that flexibility. That is definitely within sight, if I put it that way. But there needs to be a revenue mass sufficient enough to be able to have operational flexibility and really choose path. Obviously, we know there's a new climate here where profit growth is highly valued, and we definitely share that. We think that's a positive trend, to be honest, that investors value that from a business. So that's something that we are striving for, but we do still have some time before we have that level of flexibility to choose whether to invest more in the sales and marketing machine and making sure that we have well-dialed metrics in terms of sales efficiency. Then we might do that, but profitable growth is definitely something that we're striving for.
All right. And what do you think will be the main drivers of this growth? Will you seek to achieve higher penetration in the markets where you are already in, or are you going to expand to other markets? Could you just give a bit of a comment on that?
Right. I can share my perspective. First of all, I mean, for those who've been following Briox for some time, you know that we have international ambitions. That's also why we are present in several markets. Actually, as one of, I would say, relatively few players in our field with a strong international ambition. Having said that, we feel very strongly that we have to, before we sort of accelerate growth in multiple markets, we have to ensure that we have a very strong proof of concept where we are a stronghold, and that is currently in Finland. So, which is why we are investing most there. But we do this with that international expansion ambition in mind. So that is it's something that we need to balance, but it comes really down to, I think it's to have a very, very good offer to ensure what the business model that we have in place really flies, both from a go-to-market perspective and that it's something that our target audience, both the partners that we work with and the end user, really appreciates. So I think that's a nuanced answer to your straight question.
Well, thank you very much for that. That's all we have time for today. Thank you for presenting Briox for us, and thank you all for listening.
Thank you very much.
Thank you.
Okay, good afternoon to all, and thanks for listening in today. My name is Rasmus. I am an analyst here at ABG, and I have coverage of Danish banks. And among these is the topic of today's presentation, Bank Nordic, with banking activities in the Faroe Islands and Greenland, as well as insurance activities in Faroe Islands. Today we are privileged to be joined by Turid Age, who took over as CEO by the start of this month, but has been in the bank since 2007, if I'm correct, and in various positions. So we are well in hand here. And the agenda for the presentation is the first 20 minutes will be a presentation of Bank Nordic, followed by a few minutes of Q&A. So therefore, without further ado, I would now hand over the word to you, Turid.
Thank you, Rasmus, and thanks for the introduction. I'm happy to give you this short presentation of Bank Nordic. Yes, yeah, we'll take that slide. Thank you. Well, we'll start with this brief overview of the group. We are, as you can see here on the slide, a full-service banking institution, activities in the Faroes and in Greenland. And besides our banking activities, we run our own non-life insurance company, a life insurance company, and a real estate broker. Those companies are those solely operating in the Faroes. We have approximately 200 full-time employees. And with respect to the markets, we have a leading market position in Faroes with a market share around 42%. And in Greenland, we have, you can call it challenger position, where the market share is around 20%. So the growth potential within the two markets we see comes from the Greenlandic market and, of course, from the Faroese insurance market. Those two markets are quite, you can say, small, both the Faroese and the Greenlandic market. In the Faroes, there are in the Faroes there are 4 banks operating, and in Greenland only 2 banks. So it's a small market compared to the countries surrounding the Faroes and Greenland. Yes, could you please change to the next slide? Yeah, here you have the highlights of the first quarter this year. It's a bit difficult for me actually to see the whole presentation, but I'll just have a look at my own screen, and then I'll. Don't know if I know how to do that, but never mind. I'll just have a look here. I have the same. So here you can see the highlights for the first quarter, and as we say, we have a satisfactory development in our core banking operations. Our net interest income were up by 7% this quarter and 18% compared to the same period last year. And that's, of course, driven by higher interest rates. We also have the fee and commission income, quite a lower level this quarter, but on around the same level as the same period last year. Our net insurance income, you can see not as good a result as we hoped for in this quarter, and a lower result both compared to the fourth quarter in 2022 and also for the same period last year. And that's driven by higher insurance claims or increased claims during this first quarter of this year. It is so that when we live in the Faroes, we are surrounded by ocean in the middle of the North Atlantic Ocean, as you saw in the previous slide. So occasionally we are hit by storms, and when these storms appear or occur, we often also see that they result in increased claims in our insurance company. Our operating costs are up a bit here in the first quarter, but as expected, nevertheless, compared to our budget. So if there's another like area that's worth mentioning here is our net impairment charges on loans. As you can see, we have a reversal of impairment charges again, both this quarter and also last year, and that's due to a strong credit portfolio that's results in this reversal of impairment charges. So in general, a satisfactory development in core banking activities, and we see now this year, and also we also saw this effect last year, a better balance between income and costs due to some initiatives that we executed almost 2 years ago, and we see the results of this now. So yeah, for the year we have guided a net profit. We have a net profit guidance of 210 to 14 million. Yeah, and we expect that we somehow the economic uncertainty and inflation that has proven strong must lead to lower impairment levels than we have seen. But so far, and we'll come back to that later in this presentation, it looks like both our customers and the Faroese and the Greenlandic economies are doing fine. So we have not yet seen that this has an effect on our impairment levels. If you could change to the next slide. Yes, thank you. We have our equity story. As you can see, we are a significant player in two attractive markets. Although they are small markets, they are attractive, and we have all the main financial areas in our company. Our strategic focus has been on delivering and improving a digital end-to-end customer experience. But we also want the customers to be able to, at any point in the customer journey, to request a personalized advice as to be in touch with that person, in a real person. And our focus is also on developing efficient organizations through digitalization and automation. A low-risk loan portfolio, as I mentioned just before, and historically we have limited exposures to risky sectors, but we'll come back to that briefly later on in this presentation. So yeah, and capital resources aligned with our targets. So basically, this is a summary slide on what kind of operations we are and markets we are operating in. If you could change to the next slide, page 6, please. Yes, we have our ESG reporting here. We have defined some targets on 2025 targets on ESG, as you can see in the table here on the slide. And we have defined, for instance, a target saying that we should have no direct carbon emission in 2025. And therefore, we are now phasing out all our petrol and diesel cars and converting from fossil fuel to sustainable energy, sources of energy in all our buildings. And our focus here is on towards the customers, is also on developing products that support this sustainable development in the societies we are a part of. We believe that we really can contribute to a sustainable transformation through our customers. You see a sustainable transformation of the Faroes and Greenland through the customers and their investments in sustainable solutions. So ESG is an area of priority for us and for all companies these days. And we have been working with this area since 2016. And for sure, there is more to come in the following years with respect to this area. Yes, could you please change to the next slide? Here you can see a more detailed information on our impairment charges. If we first take a look at the chart at the top right corner of the slide, you can see the net impairment charges and the development in our net impairment charges, where we have these reversals of impairment charges. We have a discretionary management estimate of 65 million, and that was originally recognized due to COVID, but now it has been reassessed, and we also have increased this estimate due to the uncertainty caused by war, geopolitical situation, and also the macroeconomic development. We still expect, though, that we are able to keep our impairments below the industry average going forward, although we also see that the reversal of impairment charges probably will stop, and we'll see a more normal level of impairment charges in the future. The chart on the top left bottom here, left bottom on the page, you can see LTV for housing loans is showing that 68% of the value, loan to value for housing loans is within 40%, and then adding 25% more to levels on below 80%. So a very strong credit portfolio with strong LTV for housing loans. That is a significant area of in our portfolio. If we have a look at the last two charts here, we can see that we have a low risk loan portfolio because of a well collateralized loan portfolio. The middle one, it shows that the corporate sector is about 50% of our loan portfolio, and private sector 44%. And public sector consists of the last 7%. And if we take a deep dive into the corporate sector of 50%, you can take a look at the circle or the chart at far to the right, and you can see how it has been divided into the different areas or what's it called, sectors. So a well collateralized loan portfolio within the corporate sector. Yes, could you please change to yes, the capital position, please? Yeah. So strong capital ratios. We have a focus on capital optimization. Our as you can see, our target is 20% on capital target, and we are above that target at this area. So a strong position and a forward coming, and still a focus on optimizing the capital structure and the liquidity. And in order to do that, we plan to continue issuing senior non-preferred and or senior preferred loan here in later on this year. And there are two areas in this chart that are like highlighted or light blue, and that is the first one is the profit that has not been reflected in the number for the first quarter. So take them with that the profit into consideration. See the effect in this light blue chart. And the last one is a quick fix. We call it quick fix. Incoming legislation that is expected to reduce our REA and has also an effect on our capital position. So we can end by taking a brief look at the Faroese and the Greenlandic economy. We see a strong growth momentum. In the Faroes is highest ever exports, low unemployment, and the tourism has rebounded after COVID-19. Although, even though we see the strong growth momentum, there are some downside risks. Inflation, as seen in the countries around us, is also affecting the Faroese economy. Low consumer confidence, and Russia was the largest export partner before the war. But here we can see that the companies have been able to find new markets and to prices that are even in some areas higher than before. And that's also why the exports are at a so high level as we see now. So currently there is this agreement with Russia that where we, you can say that the agreement is the fishery agreement is an agreement where we swap types of fish between the countries. And that agreement has to be negotiated again or taken up to reconsideration again later on this year. And if we have a look at the Greenlandic economy, could you change? Yes, please, thank you. There we can see a more modern GDP growth and also decreasing unemployment, but exports in Greenland have not yet recovered, and retail sales are they were on a lower level in 2022, but here now in the latest number we can see that they're rising. They are rising again. 2 new airports are set to open here in 2024 in Greenland, and they are expected to result in a massive increase in tourism. But it will take years to build a tourism industry with a significant economic contribution. We have definitely seen that it took some years in the Faroes to do that. So we expect the same will be the case in Greenland. But overall, both Faroese and the Greenlandic economy that are in good shape and showing a good growth momentum, even though we face some risks as the countries do around us as well. I think that was the last slide in my presentation. If you change the slide, please. Yes, it was. And I have almost used my 20 minutes. So I think we're up for questions now.
Yes, thanks a lot for the presentation. Let me kick off the questions with what we can call the hottest topic in all banks at the moment, and the net interest income. You've reported 7 to 8% growth quarter on quarter in both Q4 and Q1, while the reporting line of investment portfolio earnings has also been highly positively affected. So I was wondering if you could possibly dig a little deeper into your interest rate sensitivity and what we should expect for the growth rates in the next 2 to 3 quarters based on your fixing of rates and times before we see full effect from the rate hikes we've seen at least so far.
Yes. We have 2 announcements of higher interest rates that we have announced that have not been haven't had effect yet. The first one will be effective in May and here during this month, and the second one in June. So the full effect of those 2 announcements we will not see until we reach the 3rd quarter. Of course, as you know, the expectation of the future interest increases are lower now. You're not expected to see the same increases as we have seen almost the last year. So therefore, we also expect that our growth rate will be slower in the future when we look at upcoming announcement with respect to interest rates increasements. Yes. What was the last question you asked me, Rasmus? You're muted. I can't hear you.
Sorry. Yeah, it was just overall the growth rates for the next 2 to 3 quarters based on the rates we've seen so far. So I think it was answered to the most parts. Let us just head to your growth strategy then. Maybe if you could elaborate a little bit on the market conditions and how you will grow compared to the large competitor in Grønlandsbanken, and how much more organic growth you see as possible from these 20% market shares coming from double-digit growth in the last years, and possibly also touch a little bit upon the likelihood of establishing your insurance activities in Greenland and the investment case in this, if possible.
Yeah. You can see we have had this growth focus for some years now in Greenland, and our focus is, of course, organic growth. So it's a oncoming stable growth we are into and looking into. Very much like depending on when we look at the different projects in Greenland, you can see because the market is relatively small. If there's a large project like the airports, they can have some large effects on the financing opportunities in Greenland and other sectors that see a opportunity when the airports are in function. But our strategy is to, of course, keep on the same focus as we have had for the last years, and keep on, you can say, the ongoing work in respect to both corporate and private clients. So it's not, it's a continuous focus on, you can say, a stable organic growth we are into when we look at Greenland. With respect to insurance, it's correct that we have our own insurance companies. Could maybe be a possibility to expand our insurance activities to Greenland as well. But as we are at the moment, there's a legislative issue that actually does. We're not able to enter the Greenlandic market at this point in time. We need to get this what you call it, we need to have like an okay from the governments and the institutions taking care of those issues before we can enter the Greenlandic market. So that is not a possibility at this moment right now. And we are, of course, investigating and looking into what opportunities we have with respect to that area.
Okay, thanks for that. Maybe the last question, we have a couple of minutes. I would like to touch upon the cost side of your equity story. How would you paint the picture for 2023 and 2024, and how much of the assumed cost increases would stem from wage increases and IT costs, respectively, in a time where a lot of talk in the sector is centered around trade union agreements, at least in Denmark, and AI and stuff?
Yeah, it is a challenge to keep our costs down, and we can see that wages, there's a cost increase on wages on around 4%. So that we have a factor in our budget as well, of course. But when we're looking at the agreements we have with, for instance, IT companies, IT partners, IT agreements, we can see that there are costs. The costs are rising more than 5%. So it is a challenge for us to keep costs down, as we do want to, and that is our strategic focus. With respect to IT solutions and our focus on IT solution and IT development, the new digital solutions or robotics that we are working on, we are not into AI yet. Don't know when we'll be that, but we have robotics as a area inside our company, and that is the use of robotics does make, if you go back for like 2 or 3 years, we had employees doing these tasks that we can see robotics, the robotic technique has taken care of now. So introduction of these new solutions or possibilities within IT, we can see can bring our costs down with respect to employees. So that is our focus going ahead, using solutions and techniques that can enable us to help this effective cost organization.
And if we should just quickly touch upon capital, finally, you're very well capitalized at the moment, and I just wanted to touch upon if it's likely to expect dividend payout ratios above the 70% you've calculated with a slightly longer term view, or the CET1 ratio at around 20% is also an applicable target for you beyond 2024 when this target is set to expire?
Well, our ambition is to keep our CET1 target ratio on 20%. So we are above 20% at this moment, but we still have this ambition to reach the 20% also in the long run. So that is the plan for now.
Okay, very clear. We are also a little past the 25 minutes, so I think this concludes today's presentation. Thanks to you all for listening, and Turid, thanks a lot for joining us today and giving this presentation of the investment case in Bank Nordic.
Thank you.